Glad to have everybody here today, and let's get started. I'm going to talk about some really amazing strategies to use, using option spreads. So this is what I call kind of high return, low risk. And what you're going to see we're going to cover the butterfly and the long condor. But one thing to point out, the butterfly and the long condor, especially the butterfly, the way the construction works is you're not going to find a higher returning type of trading strategy uh, that's defined risk other than a butterfly. So as I go through this presentation, you'll see what I mean. So let's get started. So the following presentation today is purely for educational purposes. Any stocks, options, futures, ETFs mentioned does not constitute advice and should not be construed as a recommendation. So to me, the secret to trading profits really come down to basically three things: direction, timing, and then really good, risk management. And that's going to be done through the use of options and primarily option spreads. So option trading has so many more advantages than just trading outright stocks. But as you probably may know, it can be a bit more complicated. But once you understand the benefits and the advantages of using options, especially when you start using option spreads, you're never going to really look back. So when used correctly, when you're using option spreads, what it provides you is really good defined risk trades. It's going to lower your capital at risk. It's going to give you greater leverage for all your trades. And it's going to provide you these kind of spreads that we'll cover today are going to provide you an unmatched hedging advantage. So over my 30 plus years of trading options, I found that the most valuable go-to option strategies that can help any trader out there more than any other is to know and understand when and how to use the butterfly or long condor option spreads. Now, the huge advantage of these strategies are their unique option framework that allow you to construct trades that will provide you more consistent and greater returns in any type of trade environment, especially when you get into higher volatility markets of greater uncertainty. And that's because the structure that you put together is only going to come up to you need only a small amount of your trading capital for these types of trade setups to give you really good high returns on that trade capital. So you're going to be able to lower your capital at risk, but it's also going to be increasing your return on that risk that you're putting up. And that's a major win-win. Now, when we look at the butterflies and long condors, they're very, very dynamic, and they can be traded for a lot of different reasons with different goals in mind. So you're going to be able to trade a butterfly or a long condor, and you're going to be covered for both your offense and defense of your trades. So, goals and protection or profits and hedging. So it gives you a lot of advantages and a lot of different ways that you can use these strategies. Now, they can work no matter what the markets are doing. You can have an up, down, or sideways type of market action, and you can use these option spreads. These can provide you income from the stocks that are going nowhere. They're going to really help you to eliminate the stress of having to be perfect on your stock's direction or overall market. Really helps to eliminate the time decay expense that you're going to encounter if you're just constantly just only buying options. And they're going to really take the unsettling guesswork out of your trading in a lot of different ways. Now, they can be structured for very, very low cost, as you're going to see. So that's low capital at risk, but they're going to offer you potentially high reward to that risk of 10 to 1 or higher. And that's really what's amazing. You can put set these up, and you can risk very, very little. But if you hit it right, they're going to make you 10 to 1 or higher, as you're going to see. Now, the butterflies and condors are also very flexible, as you're going to see ahead in the presentation. I'll show you a lot of examples. But once you learn the basic fundamental setup, you're going to be then able to adapt these option strategies for your goals and your market insight. So you can structure it to be more delta neutral, where you don't have to really have that directional edge as much. But the real beauty to me is they can be used for your directional trades. So they can be set up to offer you either kind of a bullish or bearish exposure to the market or a specific stock when you feel pretty sure a stock is headed in one way or the other. But the great thing is if you're wrong, the butterfly and long condor are going to help you to keep that risk low and at the same time retain the potential for large returns. And that's always a win-win. Now, let's be real. These types of option spreads are going to not offer you unlimited profit potential, but they're usually going to cost you a lot less than if you're just buying outright options, and they're going to offer you an amazing risk-reward trade setup. So this means that the butterflies and long condors can significantly increase the probability of your winning trades, but also at the same time reducing your risk on those trades. And that's really what it's all about in trading. So trying to control your risk, keep it as low as you can, but also have the potential to make really great returns on that risk. So that's the beauty of the butterfly. And these types of spreads can be used for any size account. You could have a small account where you do one lot, or you could do 25,000 contracts of butterflies or condors. I've done both. Brokering, used to do brokerage, set up some option butterflies for a hedge fund. We did 25,000 contract butterfly on oil, but then they're perfect for the retail smaller investors or traders like ourselves, because you could do one lot or 10 lot or 20,000. So they're a fantastic, way to trade. Now, when we look at the butterflies and long condors, they can be used for hedging when you mess something up. So they can be used as a really fast, low-cost way to cover your, what pronto when a position starts to move against you. And I've literally found no other hedging strategy that comes close to incorporating either using a butterfly or long condor to hedge a core position. Now, by constructing either a butterfly or a long condor around a strike that is under pressure from another core trade setup that you have on, such as maybe you had a credit spread that starts to go against you or a debit spread, this can become the best way, or has become the best way I've found, to immediately neutralize and lower the risk and then control that risk. So you can do these types of spreads around a core trade, and you're going to not only neutralize the risk, but you're going to lower the trading risk that you have on. Now, when you look at a butterfly long condor for hedging, what it really does for you, it provides you a way to keep your original position open by just implementing either the butterfly structure or long condor structure hedge around your original position. So what this does, it takes advantage of that time decay component of this spread. All right, so when we look at a butterfly and a long condor, it's got two basic components. You're buying options, an option spread, but you're also selling against it an option spread. So you're then selling, time and volatility, which takes advantage of time decay. So you put this around a core position, and then if you think that, like, let's say, for example, today, we had a big pullback yesterday, right? And then today stabilizes and starts to move back up. So if you had maybe a butterfly or a long condor on a trade, as it comes down, you're still getting paid for that trade to pull down, and while you're waiting it out to stabilize. And then what you can do is you can close out your hedge and then ride the original trade for what it's worth. But while you're waiting, you're getting paid with that time decay component that is involved or part of the butterfly or long condor trade. So when we look at it, it's a pretty simple construction of a butterfly or condor. So basically, let's say in this example, we're long a call here and we're short a call. So what this would be is a call debit spread, right? And so on this particular example, the risk is defined in this example to $300. So that's still good, 300 maximum risk. But, I always teach my clients and members, let's not lose the full at risk, okay? So we could reduce this real quick, and we could also retain a potentially even larger return on that reduced risk. All we need to do is convert it to butterfly. So what we could do is sell a bear call credit spread against it. So looking at this example, if we just add another spread to it, sell a credit spread, we bring in $200. So here now we've shorted a call at the same strike as that call debit spread, bought a call here, brought in $200 credit. So now we've reduced the risk down from 300 on this example to 100. And we've converted it, this is what we call a balanced butterfly. So it's composed of a debit spread and a credit spread together. Now inside of this zone, we call this the profit zone. This is the top of it. We call that the tent, the top of the tent on the butterfly. That's going to be your max profit at expiration. But if you get a wide enough butterfly, you've got a really big zone to trade, and you're going to keep your risk super low. Now that's the butterfly. Now I love the long condor because what it does, it's very similar to the butterfly, but it spreads out, expands that profit zone. And that's the great thing here. So typically what I'll look at, if I'm going to hedge a position, I usually hedge it first to the long condor, and I spread out that zone here. Okay, so the butterfly is a little bit more like threading the needle. but I will first usually go to the long condor spread hedge. And then if I still need to hedge it, I could close the long condor, I could close this credit spread here, take profit, and narrow it down and convert it to a butterfly to reduce risk even more. Or I could leave that credit spread on and then just add another credit spread. So you can just, the beauty of options, you can mix and match once you understand the fundamental or foundations of vertical spreads. Now, the core concept that make the butterfly long condor work really comes down to the really important factor of time. So the most important option factor for profit generation using the butterfly long condor strategies comes down to understanding how option pricing works and the concept of time decay or theta and how it impacts this trade. So let's take a kind of a quick review. Now, when we look at the core concept of options in general, one big major option pricing component is theta or delta or time decay, which is theta. Now, so what this does is it tells us how much the option price will go down over time, and that's the rate of time decay of your stock or your security. Now, time decay occurs because the extrinsic value or that time value component goes down as expiration draws near and will be zero at expiration. So it's a decaying part of that option price. So we can take advantage of that, and also volatility is the same way. So within this kind of trade construction, we are actually selling time and selling volatility as part of this structure. So when we look at the butterfly, and the condor, they're very similar, but they can be used in a lot of different ways and a lot of different variations to the structure. So here's an example. So let's say you're long XYZ and it's trading at $45. And you're looking for it to go down and you're targeting $43 for a directional trade to the downside. So not a big move here, but you can structure a trade for very, very small capital at risk and for a fantastic return. So first, one step that I do on all trades is what we call kind of price target mapping. So we map out what it would be our target. And so in this example, $43. And we're going to target that trade or $43 within a certain period of time. So if you look at this kind of construction, we could buy the December 44 put, pay $238 or $238, and then sell below it, one strike below it, the 43 put, bring in $1.67. So if you look at that, that's a put debit spread. Then we'll sell another put against it, the 43, and buy the 42. So we bring in another $1.67, and here we've got a debit cost of 106. So that constructs a butterfly, a balanced butterfly. So you can make these narrow or you can make them wide, bigger target zones, and you can adjust the spread width to define your trade capital at risk and to define your potential profit. So that's how we can adjust risk reward based on the spread width. So in this example, if you just add up the debit cost of $238 on that 44 put you bought, the $1.06 on the 42 put, and then you bring in credit of $1.67 twice, times 100 to convert it to an option spread price of $10. So your total risk on this one spread, if you did one butterfly here, would be $10. Now your target price is 43, so we're putting that as the body of the butterfly. And then your potential profit is you just take, the middle strike 43 less the lower strike 42, minus your cost of your trade, which is a debit trade. So your risk is your debit paid times 100. So in this example, your potential profit, 43 minus 42 minus that 10 cents, would be 90 cents or $90 per butterfly spread. So if it was good to go out at expiration at 43 bucks, you would make approximately $90. Now you'll never make exactly that amount on a butterfly because it's just kind of back and forth right into the close, but pretty close. But look at that, if you did make close to 90 bucks, your risk is 10, that's a 900% return. So you're basically risking $1 to potentially make $9. But think about that, if you make a 900% return, you can see if you do butterflies and you get 50% of that or 40% of that, still a huge return, right? So we can structure it so many different ways and use this butterflies and condors for hedging or, for speculative trades, et cetera, or just kind of risk management. Now, how do you choose the best butterfly or long condor strategy for your trading goals? And, to me, one major goal of every trader should be to look to select trades that are going to be based on what's going to provide you the most consistent positive return with low defined risk and not always going for that home run. So you want to kind of look to, my kind of philosophy is look to, get singles and doubles, and occasionally you'll hit that triple or home run, and that's the way you can utilize the butterflies. So one of the best ways then to achieve this is to be able to be aware of what option strategies are available to you, understand how they work, and then select the one that's going to be best suited for the market environment you're trading and your specific trading goals or your style of trading or your amount of capital that you have to trade. So everybody's going to be a little bit different, but these strategies can be used for anybody's trading goals or capital account. Now, when we look at the butterfly, I call it kind of the butterfly family. So there are a lot of different variations of the butterflies, but these are basically kind of option selling strategies because they have that sell side component. So we can have butterflies, we can do long call or put butterflies. We could do what's called a broken wing or skip strike butterfly using calls or puts. We can use what I call the ninja butterfly, which is an unbalanced or ratio butterfly. Then there's the iron butterfly, and then there's another category of hedging using the butterflies, and then also then throw in there the long condors, very similar. So let's take a review of some of these trades. I'll show you some different examples of how they can be structured and used. Now, first we'll look at just a balanced butterfly, all right? It's a very simplistic structure, but it has so many different ways that we can utilize it. And then we'll go through some examples. So here's a butterfly spread. So how to adjust your risk and the profit of a butterfly will be based on the wingspan of the butterfly. So what does that mean? So think about it, if you're trying to catch a butterfly and you've got a tiny little net, it's going to be probably a little bit harder to catch that butterfly versus if you've got a really big net, right? So that's kind of what we call the wingspan. So we can adjust the wingspan of the butterfly to control the risk and also to adjust the potential profit of a specific trade. So the narrower we make a butterfly, the less risk, but also the profit will be reduced versus the bigger, wider the butterfly, we've got a bigger net, bigger profit zone. So that's how you want to structure it. You can just, depends on your view, you can structure these things wide or narrow to control your risk and control your return. So let's take a look at a few. So here's a narrow wing butterfly example, which is a $100 wide spread. So butterflies are great on ETFs, SPY, QQQ, IWM, or the index options, SPX, the RUT, or stocks. They're great for any type of, or futures, crude oil, gold, whatever. So here's an example on ETF SPY, and this is going to be a narrow wing butterfly, keeping the risk really low. So I always use Fibonacci and targets, based on that in option activity. And so here we were targeting the 618 retracement right here about 273. All right, so it was trading at the time, was trading right here about 265, and we were targeting just a short-term trade up to about 273, and we wanted to keep the risk super low. So we did this with the narrow wing butterfly. So if you look at this example, it is buying, we were targeting that 273 based on Fibonacci, and option activity was there. So we bought the 272 call, sold the 273, okay, at that target price. That was the body. Then sold the 273 again, bought the 274. So dollar wide butterfly. So you take your spread width, if you look at the difference between the two strikes, that's $1. That would be $100 per option spread. The cost or the risk of this trade is the debit paid, which was 10 cents. You can see it here, or $10. So your potential theoretical profit or return would be $90 per spread on the risk of 10. That's a 900% return. But with the butterflies, we never look to make, you're never going to make that exact amount. But if you can make, part of it, look at that. This trade actually made $70 per spread, which was a 700% return. So you're not going to find another option strategy that can provide you this type of return on defined risk. Now you could do a call spread, you could do just long calls or something, and you might get, huge return, but you're going to keep your capital at risk a lot lower than if you're just doing outright options. All right, so here's potential 700% return, but your risk is $10, so that's hard to beat. All right, so let's take a look. And this was structured with a really narrow wing butterfly, keeping that risk super low. All right, so here's the profile of it going out at expiration. So if you look at that purple line, that's where it is in time, right there going into expiration. So it's trading right here, almost pretty close to that body, but that little area in there is still what's profit from, you know, what's left at the extrinsic value, et cetera. So this was going out at 273 at expiration, and so you can see it went from a 10-cent or $10 debit to $80, okay? And that's your $70 profit per spread, or 700% return, and this was in 2 days. So it takes advantage of time decay, big advantage, volatility collapse, and high return on capital. So time goes to zero at expiration and volatility goes to zero. And this type of strategy is both selling time and volatility. So that's the beauty of it. But the other big thing is you can control huge price action stocks for very little capital at risk. So let's take a look at the next one, which I'll show you how that works as far as capital at risk and low capital at risk with the butterfly. So here's an example on Amazon, and everybody here follows Amazon. It's a, you know, it can be a monster and it's expensive. So this is doing a long trade on Amazon with a spread width of $3,000 per spread. All right, so here was Amazon. This was just recently, and it was trading right down here about, it was trading at 31.50, right in here. And so set up a butterfly, very short-term butterfly for a move to targeting 3,200, 3,220 area. All right, so did this with a really low risk trade. We could have made it lower risk, but we made it with a wider wing butterfly to give us a bigger profit zone. So this was set up targeting 32, 3220 on the body of the butterfly. So if you look at the trade structure, this was buying the 31, that we were targeting that 3,200 to 3,220, but we made it wide, so we had a big range of profit, you know, range. So bought the 31.90 and then sold the 32.20 call debit spread there, $30 wide per spread, and then sold the 32.20, bought the 32.50. So this was a very wide butterfly to give us a big, huge profit zone to work with. Now, the cost of this trade for one spread was $388. So if you take your spread width, 32.20 minus 31.90, that's $30 or $3,000 per option spread, minus your cost of the trade, $3.88 debit. That's the maximum at risk on the trade. Now your theoretical profit, if it was to just nail it perfectly at expiration at 32.20, would be $2,612 for one spread. That'd be a 673% return on your risk of 388. But we were looking for this just to have a big wide zone in case it went blue, you know, above that 32.20 out here or down here, so we'd still make a profit. Big fat wide butterfly. Now, if you just, now here's the other great thing. If you went out and just bought 100 shares of Amazon at 31.50, you would have been shelling out $315,000 to buy 100 shares. And if it went up, you know, to your target there, you would make 50 per share or 2.33% return. So which would you rather do? You know, have the risk of $315,000 per 100, or do one option spread here and your risk is 388. So it's a no-brainer as far as that, and your potential return is like 6-to-1 versus here it made 2.33 if you got it right. So many different advantages for this type of structure. So here's what the risk profile looked like going out on the expiration date, that Friday, the 27th. So this was just basically in and out in 2 days because it was put on the 25th. 26th was Thanksgiving, the market was closed. The next day, didn't think the market would move, so that's why we did this kind of wider wing here. So it was going out right here at 32.10, all right? But this 32.10 gave us a really good, still a big profit. So it went from $388 debit per spread, one spread, to $14.26 within 2 days. So you can see here, that's a up $1,138 per spread profit on your risk of 388. So that's a 267% return. So that's the beauty of it. You know, we're never looking to get that max, but if you can just get anywhere in that range, it's fantastic, and you're doing it on very little at risk. So that's one example, okay, so of a wider wing butterfly and how that's beneficial. Now here's another example. This is going short, and a lot of times it's been hard to trade this market short, so the butterfly is a good way because we can control our risk, keep it very low. So this was a short trade setup that we were looking at on what we call a retracement failure, And so we were looking for, it was trading at 276 right here, and we were looking for it to fail, kind of reverse off that moving average and go lower. So did this with a put butterfly. So we were targeting 270, and at the time the trade was set up, it was trading at 276. So we did the target 270, bought the 273 put, sold the 270, and then sold the 270, bought the 267. So if you look at that, it's $3 wide spread, okay? Cost of the trade, look at the cost of the trade, 30 cents, $30. So if this thing went straight back up like what happened today, the market comes down one day and goes up the next day and you didn't get out, you lost 30 bucks. But if you got it right, you'll look at the potential. So the spread width is $300 minus 30, potential profit at expiration would be 270 or 900% return. Now, 2 days later, though, this trade was, it did make a decent profit, 216% return, but the beauty of it is that low capital at risk. So let's take a look at what it did on going out here. So the trade was, took profit on the 18th, set up on the 16th, hit down to or close to the target 271. When it hits the target, you start taking it off. So it's trading right here. So it went from 30 cents was your debit cost, or $30, to $95. All right, so there's your $65 per spread profit on that risk of 30, 216% return in 2 days on that. Here's another example of Amazon. Another way to play Amazon, if you want to trade it, has great potential, but it's expensive. So here's another example of doing a wide body, $1,000 wide. So we were looking here, we had good support coming in here about 1763, in this area 1782, and we were looking for just a move towards this 1830 level. So we structured a butterfly targeting that 1830, and we did it for super little at risk. All right, so we bought the 1820 call, sold the 1830, that was our target, and then sold the 1830, 1840, and bought the 1840. So $10 wide or $1,000. Now look at the cost of the trade. It was 80 cents or 80 bucks. That's the maximum risk on the trade. But if you got it perfect and pinned at 1830 at expiration, this would had a $920 per spread profit, and that would be over 1,000% return. Now here's the thing that works so great with the butterfly, two different things. If you had just bought shares of 100 shares of Amazon, you'd be shelling out over $178,000. Now, if it went to your profit target of 1830, you made $48 per share, but your return is only 2.69, but you have a huge amount of risk. Versus this, you control 100 shares. If you did one option contract spread for $80 versus 178,000, and a huge return. So here's the other great benefit. This is on the expiration day of the 6th. This was in the morning. So AM, this was about 9 or 10 in the morning. At that point in time, the spread was up $150, which is still a good return, 187%. So it went from 80 to 230. Now that was in the morning, but look at it 3 hours later when it's in the afternoon. This thing has gone up 4 times the amount based on the volatility and time decay component being sucked out. So here it is in the afternoon the same day, and it's trading right here, still very close to where it was in the morning, but this has gone up 4 times. So instead of $150 per spread, now it's up to $614 per spread, and that's a return 4 times more of 769% return. All right, so in the afternoon it went from 80, now it's trading at 695, and that's because of the time component being sucked out of volatility, and volatility being sucked out because time and volatility at expiration go to 0. So we're taking advantage of that key component. So that's another really great advantage of the butterfly. Now here's an example of the long condor. And this is one that I love to use kind of as the first go-to hedge type strategy. So if you look here at the long condor spread, it's going to give you also structure for positive theta, very low capital at risk, high return on your capital, and great for hedging. So they're both great for hedging, but my first kind of go-to is to the condor, because then we can actually go to the butterfly if we need to. So here's the structure. You can do calls or puts, using the condor, long condor. It's not an iron condor, it's totally different, but a lot of times people get confused. So you can use calls, so it'd be long a call, debit spread, short a call credit spread here, or you could use puts. So you'd be long a put spread, you know, put debit spread, and short a bull put credit spread. So either way, you can structure it. So this example will show you how you can use it for a hedge, converting your trade. So this was a long condor on defending an SPY put debit spread that was set up for a short trade. And so we had set this trade up. It was a put debit spread. It was trading right about here, 275. And we were looking for a move down to around that fib level here of about 270. But again, you know, it's been hard to short the market. You get a big push down and then you might have a huge snapback. So we did this as a put debit spread. And then the other beautiful thing with options, if you just think a few steps forward, like playing chess or cards or something, and you're thinking, okay, what if it gets to 270, my target? Is there anything else I can do to increase the potential return or profit of this original spread trade that was going to be a put debit spread? So yeah, one way we could do this is we could sell a bull put credit spread out of the money, and we could potentially turn it into a free trade. We could do it with a butterfly or a condor to do that. So that's what this trade ended up with. So the original trade was long the 273 put, short the 270. So if you look at that, what's that? A put debit spread, $3 wide. Very low capital at risk, really good spread trade setup to start with, 65 bucks at risk. Spread width is $3 or $300 less your cost here. So potential on this, if it expired at expiration, you know, below your short strike here of 270, you'd make that $235 or 361% return. Fantastic. But what happens in this market? You'll get the big move down, but so many cases or times, then it'll flip right back up. So there's not enough time where it actually closes below your strike here to make it a max profit. So in this trade setup, what we do, you know, a lot of times on these is you take some profit on the first move down. So if you look here, you would have taken $98 when it hit down to your target of 270, 71 there. Nice return, 150. But then rather than closing out the whole trade, you could convert it to either a butterfly or a long condor. And so what you try to do is see if you could do it for a free trade by bringing in enough credit on the sell side to offset your put cost or your debit cost. All right, so here's how that works. So when it flipped down there to that 270, sold the 268.65 bull put credit spread, brought in a credit of 65, and that offsets the debit cost of 65. So now we have a free trade. All right, so here's what we ended up with on this example. We started out with that put debit spread here, okay, cost $65. And then when it flipped down to that 270 area, able to sell a bull put credit spread out of the money, brought in $65. So now there's zero risk on the trade, free trade. And if it goes out in this area between the short strikes, $300. Now it didn't go out perfect, but it still had a great return, but we had no risk on the trade. All right, so it was going out right here, and that was still a pretty decent trade. So it went and it was trading up, it was up $166, $64 per spread here on zero risk. So when you look at the two together and you've reduced your risk, you're able to stay in the trade, maximize that return by doing this kind of adjustment. So trade one, if you just took it all off there, you made 98. If you did nothing, you would have ended up losing on this trade. But then you converted it, trade two, to that condor, you made 164, but on zero risk. So you can sit back and just let the trade work and see what happens. So that's the really beauty of these types of different trades. Is once you understand just the foundation, the fundamentals of your vertical spreads, then there's so many different things that you can do. So if you'd like to learn more on how to master these really, you know, high reward, low risk option strategies that work in any kind of market environment, there are two things that you can do right now. One is hopefully you get enough ideas here from today that you can start using it tomorrow. But if you'd really like to master these things and understand all the ins and outs a lot quicker, I've got a really good package for everybody here that is visiting us today at Expo. Right now, use this link and you can get this package with all bonuses for just $97. So I'm going to put it in here, and you should be able to click on that. And it'll pull up this payment link here for $97. You can use credit card or PayPal, but you're going to get everything that I'm going to show you. So this is my options Butterfly Masters course, on demand recorded, fantastic course, but you've got a lot of different bonuses here as well. So you can copy and paste that, or you should be able to click on it. So just use that link there, powercycletrading.com/2fly, all together, just, no caps, and use this link here, and you're going to get this really great bonus package. So you're going to get the recorded 6+ hour trading course on butterflies specifically and condors, how they work. You're going to also get a live follow-up Q&A. We'll send you a link to that. And then you're going to get the full course. It's all broken down in 30-minute video modules, and you'll get the PowerPoint of the trading course, 437 page there, and 8 enrollment bonuses here today. So what you're going to get is that 6-hour recorded options butterfly course. If you go to my website, it would be $397. You're going to get this brand new course. I just finished this last weekend. I did this live last week, and it's what I call my price target mapping. So this is how you map out price targets for profit take, stop loss levels, defensive levels, etc. So it's what I call price target mapping using Fibonacci. So you're going to get that as a bonus here, and it's a great course. You're going to get my options beginners course. So add that to your library, and my beginners option program. So all that, plus you're going to get a follow-up live Q&A, which will be recorded as well. You're going to get my option trading tutorials, just another option course, basically on the option Greeks and probabilities. My option strategy manifesto, 15 other option strategies you can use. My power tool guide, so you can get this printout to put on your desk that'll show you what the Greeks are, how they work. And as an additional bonus, a trial membership for 30 days to my trading club, which gives you access to our virtual trading room, Q&As, and a lot of other benefits. Now you can start this whenever you want, your trading club 30-day trial, whenever. Just send us an email to support@PowerCycle Trading if you want to start at a different time. But you're going to get everything here, but the course is the main course. But you're going to get all these other great bonuses for just $97 here today. So hopefully you'll take advantage of it. For $97, I guess you can't go too many places and not spend $97. So this is going to be a great investment in yourself, and you'll make this back in just spades. All right, so you're going to get the butterfly course and long condor course, 6+ hour course broken in 30-minute modules. This is yours forever. This will be on the cloud, the videos. You can then print out the PowerPoint if you want. 437 pages. My courses are very detailed with lots of trade examples to illustrate how these spreads or strategies work. So trading butterflies for income, high reward, low risk directional trades, non-directional hedging, and more. So we go through the option Greeks, what the vital parts of those are for the butterfly condor, the importance of time decay, how to take advantage of that, the impact that it has, how to control that, take advantage of it, volatility, how to take advantage of volatility, which these spreads are selling time and volatility, how exactly option pricing works, and then how that affects time and volatility. So those are two big components of the butterflies and condors that you need to understand, which this course will really take you through in detail. How to use standard deviation for selecting your strike prices for your trades and your targets. And then the core basics most traders just don't understand about the butterflies. So it'll demystify what a butterfly condor are, and then how you can trade it. And then we go through in the course, go through every different variation of a butterfly, and then how, why, and when to use these different variations with examples. So how to use the long collar put butterfly, a wide wing butterfly, broken wing butterfly, ratio butterfly, how to use the broken wing ratio butterfly, iron butterfly, vacation butterfly, long condor. So if you ever watch Forrest Gump, it's like Bubba Gump and the shrimp. So a lot of variations, but you'll go in this course, it takes you through every one so you can see which one you might want to use. And then goes through what's the best time frame. Should you go out 1 day, 10 days, 3, a month, 2 months, whatever. So what are the best time frames to use to capitalize on the butterflies and condors? Should you use stocks, ETFs? We go through in these all the different examples of those, what to use, either index options or stocks, etc. And then how do you get these setups where you get 10 to 1 or higher? How to find those and how to structure it? And then how do you profit from option volatility collapse and theta decay using these two structures? And then a really fun part of the course, or really great, another kind of income stream, is how to use these for what we call, for monthly option expiration, which comes every month. We have option expiration, so 12 times a year. And what we do here is we use the butterflies typically to do what we call option pinning strategy, around where we may get an option expiration, or what we call the pin. So then, so in the course, it'll teach you how to target, where a monthly expiration could go out, based on option activity and Fibonacci. And so that's part of the course as well. And then we'll go into the long condor part of the course, how to take advantage of the long condor option spread, using the combination of your vertical spreads, and then how, why, and when to use the long condor. So a big part of the course is on that. And then about probably a third or even more of the course is on hedging. So then it takes you through a step-by-step process of when to put the trade on, take it off, risk management plan, etc. So the course covers everything, but then a big part of the course will be how to use the butterfly and long condor to hedge core positions. So if you don't know how to hedge, you're not going to last in the trading game very long. So this is a very important part of the course, and something that you should really pay attention to is hedging. So how that's going to be done, how you can alleviate potential risk by using the core butterfly or long condor as a hedge on a core position, or to defend, say, a vertical credit spread or credit spread. You'll get a resource library here of how assignment risk works, expiration works, auto exercise, and then it comes with a trading library of 58 pages of different option trades, butterflies, condors you can go back and look at. So a little feedback, excellent class, Larry. As usual, under promise, over deliver, Pam. Wish I'd known how to use these hedges before I lost so much money on credit spreads. That's so true. And then kind of the same from Jim. Thanks again for showing so many ways of getting out of trouble. And that's what you want to be doing with options. How do you get out of trouble? They were created for hedging, so that's a perfect example. Could have come in handy in the past, and my trading P&L would have been totally different. Thanks, Jim. And then besides being profitable, you can tell the audience that your courses are right on point, and you're an expert among experts. Thanks, Dan. So here's your bonuses. Number one, you're going to get my brand new course on price target mapping using Fibonacci. So this is a all new course, just finished this last Saturday, step-by-step Fib course on how to gain major trading edge using Fibonacci and price target mapping in your swing trades or day trades. This process covers Fibonacci price target analysis, moving average automated trend line analysis, price action support resistance levels analysis, standard deviation target forecasting, and unusual option activity. So it's a 3-hour plus course recorded, broken down in 30-minute modules, and the 130-page course manual with handouts on this course. And then you're going to get my options beginners course, so new on-demand course here for the beginners out there, if any, and how the benefits of options, insider tips, mastering puts versus calls, option expiration, and a couple different beginning option strategies, how those work, covered calls and protected puts. And then I'll give you also here, you get my option beginners home study package, another option beginners course, 4-hour course, really great course. One follow-up Q&A we'll do live and be recorded option trading tutorials. So this is a 60-page option guide with videos on the Greeks and probability standard deviation. 15 option strategy guide, you'll get this. So 15 different options, other strategies, how they work and when to use, back ratio spreads, etc. And then my Power Greek tool guide you can print out, which has all the Greeks. One trial membership to my trading club, so for 30 days. And with this, you'll get access to our virtual trading room each and every day during the morning and afternoon. Come in there for our live sessions, access to our weekly Q&As, my market trading video updates every night after the close, 60% discounts on all courses and software you can use for for your trading trial as well. So just a lot of great stuff there. So everything here today, if you'd like to join us, please do, and you're going to get your money back and then some from everything you're going to learn in this course and learn from visiting our trading room. Yes, we do give specific trade setups in the trading room each and every day. So come in and join us. And again, thank you for having me here today. I think I'm about out of time.
All right, thanks, Anna. Thank you, everybody. Good morning, and appreciate your time here this morning. It's a little unusual for me to present during market hours, so I'm going to actually be able to show some data and some trades I'm in right now. I am trading all the time. I'm predominantly a futures trader, just to give you a little background. So I normally don't do presentations during the trading session, so this should be kind of exciting. I've turned off almost everything that I possibly can turn up so I can give everyone my time and attention here this morning. So what I'm going to do is talk about something that I call money points, and I'm calling it a semi-automated framework to clearly identify turns and trends to trade price rotation. I want to keep this really simple. Trading is simple. It's not necessarily easy, but what I hope you get out of today is I'm going to give you two very simple indicators that I use that can actually be turned into a trading framework. And I'm hoping at the end of my 30 minutes or so today, you actually have a few things that you can apply to your trading immediately. Doesn't matter what time frames you trade or what you trade. These are going to be universal things that you can apply. So we call it a framework, and I call it semi-automated because, as you'll see, what I've done since I'm getting a little older and I can't stare at the charts anymore and I can't necessarily look at all kinds of indicators above and below price, I've just simplified it so that it provides signals right on my charts, and you'll see that today as well. Before I get started, I want to remind everybody that this presentation is for educational purposes. Nothing that I'm going to say or show is in any means a solicitation to buy or sell any security. Trading does, of course, involve risk. And since I'm predominantly a futures and derivatives trader, I wanted to remind everybody of CFTC Rule 4.41. You can pause it right here and just take a look at that if you're watching the recording. But essentially, you know, trading can be risky, especially derivatives trading, and you want to be aware of those risks. Okay, the agenda today, what I'd like to talk about is why I hope I can make a compelling case that you need some form of automation. And when I mean automation, I don't mean you need to have a fully automated system that you turn on and watch, or you need to be a programmer, or you should be looking at buying trading systems that you run on your platform from anybody else. I don't want to be derogatory about any of that, but I just don't think that that buying something that you don't understand the logic behind is not necessarily something that works out for most people. But you do need some form of automation, something that actually helps you out and gives you a little bit of an edge, and we'll talk about that today. I'm also going to teach how to use a few indicators that can produce these high probability trading signals. And I'm going to give you dozens of examples from today's live market. In fact, I want to make sure I can get to the questions. Let me just make sure I open this up over here. Yeah, okay. I don't know if I'll be able to actually see them in real time, but when we get to the charts, I'd be happy if you just want to throw out any kind of symbol. We can take a look at it, see how it applies to what we're talking about today. And then I'm going to just make a simple, compelling offer to try out TDG, but I'm a trader first and foremost. I don't do a whole lot of sales and marketing of any kind. I don't have anybody with me here today to go through any of that, so I'm just going to make that as simple as possible. Everything that I do is pretty much pretty simple there. What's not on the agenda today is any kind of secrets or picks or research or anything hidden or mysterious. I'm not a big fan of talking about making X amount of dollars per day using anything that I do, or suggest that anyone else should actually look at their trading, even if you want to be an active intraday trader or make trading a larger percentage of your income, even your full-time income. Professional traders don't talk about making X amount per day, so we just don't do that. There's nothing wrong with it if you want to sort of target those things. If anything, you want to talk about max amount of money that you could potentially lose on any given day. But so we're not going to discuss any of that. I'm not going to suggest that trading is easy. In fact, this presentation is probably more suited for folks that have been kind of bitten by the bug and have a general interest in improving and honing their skills of trading. So trading is certainly not easy. There's nothing easy about it. And I also don't want to claim that anything that I do has never been shared before. So basically, it's a kind of a no BS zone is the way I kind of look at it. So the workshop is definitely for you, what we're going to be talking about today. If you've been kind of bitten by that market bug, now I would assume, you know, there's several hundred people here. If you're here in the middle of the day, you already probably have an interest in the markets. But ultimately, I think from a trading perspective, you probably want to be the type of person that's gone a little bit further than that. And I'll discuss as I go through the presentation today. I've been very fortunate over the last 20 years of my trading career, very, very diverse background, and I've been on both sides of both trading and education, consuming it, as well as now sort of producing it. And I find that ultimately, investors, traders, self-directed traders that have the most passion for just the intricacies of the way capitalism and our markets work are the ones that are going to most likely find the way using a framework to their own methodologies within the marketplace. So that means you're willing to do some work and you got a bit of a growth mindset, because this is what I believe. You know, trading is actually a skill. You might have heard that before. So like any skill, it takes time and effort to develop that. And everyone's skills levels is going to be a little bit different, and everyone's approach to the game of trading, if you will, is going to be a little bit different. But investing is a process. So often you'll hear about the difference between trading and investing. People say, well, it has to do with your timeline. Maybe. But really, investing is pretty simple, actually. Investing is simple and easy. If you're an investor, you should have a process associated with how you get into the investments that you make and a bit of a plan around it. And then after that, it's just executing that process. Trading, however, is essentially a skill, and that's what we're going to talk about today. I'd like to give you a couple very simple things that you can do to begin potentially towards the path of improving your skill as a trader, because this is what I know, that books, videos, podcasts, seminars, online courses, coaching, and yes, everything I'm going to present today, it's virtually worthless because none of it's really going to work unless you do, okay? So the first thing I'd like to just ask, and I probably won't have the opportunity to see if there's, I can't really, let me see if I can break, I'll do it later. Do you have a trading strategy? So maybe you can, by show of hands, you can let me know if you have a trading strategy, and I'm going to try to figure out, yes, okay, we got yes. And for me, if you want to know a definition of a trading strategy, it simply means a rules-based, systematic, repeatable approach to understanding where, why, and how to enter markets, okay? It doesn't matter if it's options or crypto or Forex or stocks or whatever, those are all tactics, but trading strategy would be a series of criteria that allows you to enter a market and rules associated with that. And by the way, trading strategies don't necessarily have to include, in my opinion, they don't have to include your risk management, your sizing, all of those things. If you have a completely automated trading strategy, you do. So sounds like many of you have a strategy, okay? Well, that's great, which is a super good start. And I would suspect that based on just everything I've seen out is that put a T if it's technical, put a F if it's fundamental, and put a, I don't know, put a B if it's both. Most are probably going to be technical traders, right? We're looking at charts and we're making our decisions. Okay, so most everyone's saying they're technical trader. Okay, well, here's how my strategies looked like for a very long time. Okay, I started trading in 1994. I'm gonna date myself a little bit. As a wheeled lad at Merrill Lynch. So, and I was pretty darn successful on the syndicate desk trading. Back then, we were actually able to trade some of the syndicates and IPOs that we were involved in. But I've been trading a long time. And I would say for the first 15 years of my trading career, a lot of my charts look something like that. So really, my search was a search to get systematized because I had charts that look like this. You know, I had charts that look like this. And by the way, there's nothing wrong with any of this if it's meaningful to you, and if somehow you're able to actually see price and absorb a lot of data at the same time. But for me, for over a decade, I struggled with just about every form of technical trading strategy that I was taught or came in contact with that involved lots of moving averages, lots of indicators, a decent amount of confirmation before I entered the market. It was just too much. So what I moved to after that was I moved to pure price action trading. Put a Y in the chat there if you consider yourself pure price action, meaning maybe a really clean chart and you just trade pure price action. You don't really need many indicators. Maybe you can just sort of visually, okay, well that's great, because for me, pure price action was the beginning of a start towards something where I didn't have to rely on all these crazy indicators and all these things. But here's what started to happen to me with pure price action. It was too mentally draining on me, right? My eyeballs began to look like that. I couldn't find my way when I would bring up a chart and I was just constantly drawing occasionally a trend line or a few things, but no real indicators. And I just began to find that I needed something that actually did more of the work for me. Because the most heard words in trading really, you know, fear, greed, patience, discipline, and decision. What I needed was something that was simple, repeatable, and measurable. and all I had to do was actually wait for a signal. And even before I automated a lot of this and provided signals for myself, and obviously, of course, this is nothing new, vector vest, all these kinds of things say buy here, sell there, those types of things. But when you combine that with a real internalization of your knowledge of why the computer is telling you to do certain things, then trading actually does become simple. Not necessarily easy, but simple. If you have fear, just wait for a signal, okay? If you have greed, wait for a signal. If you're impatient, you have to wait for a signal. If there's any sort of discipline or indecision, because once you measure a trading strategy with some very, very simple forms of automation, a signal telling you when that condition exists, you really have the beginning of something actually pretty powerful. Okay, before I go much further, I just wanted to do the really, really quick sort of social proof or whatever, because probably none of you have ever heard of me. I don't really do much in terms of a whole lot of marketing of what I do. We work a lot with select clients and things like this, but I've been trading a long time, as I said, and one of the things that I've done since I got back into helping other traders is go out there and try to do as much validation as I could. So in the futures trading world, there's things called prop trading programs. Put a Y in there if you've ever heard of prop programs or proprietary trading programs. I don't know if you're familiar with them. In the futures markets, they're a lot easier because there's no regulation or anything required. So there's firms like Top Step and One Up Trader and things like this. So I've gone through and used the exact very simple things I'm going to show you today to qualify for a lot of different funding. And then you can see over there on Trade-Evade is another futures broker. Again, I trade all instrument classes. In fact, I'm trading more crypto Bitcoin these days than I have in quite a while, both in the futures and on the cash market. But there you can see that I don't even know what trade like a pro means, but Trade-Evade said that they felt like I was. And I went back to October of 2017 when I opened up the account. I'm not super proud of this. You know, trading 5,000 contracts is not necessarily something to be super proud of. I mean, that's a lot of trading, but I do trade pretty decent size, and I trade very actively, and I'm in the markets, and I'm using exactly what we'll be talking about today. And by the way, this is all live trading. This qualification over here is a demo account that you use to qualify. This is from my trade journal. I won't spend too much time here, but obviously it's an equity curve that looks nice. And then finally, this is what, in my opinion, real trading looks like. You have winning days, you have losing days. You want to be tracking everything you're doing. This is a product called Trader View. That's Trader VUE. If you are someone who is serious about trading and want to make it a larger percentage of your income and have the time to invest in that, I would highly suggest you find some form of a trade journal that does both qualitative and quantitative analysis for you. So that's just a little bit about the beginning of this year. Okay, I want to just give one real quick example of just a trade from the past, and then we're going to get into the charts here together. So does anyone know what June 23, 2016, what happened on that date? Let's see if I can, oh, there we go. I broke out the questions. I'll answer those questions at the very end. The name of the trading journal is Trader View, VUE at the end, not to be confused with Trading View, which I'm actually going to be showing. Brexit, there you go. Gavin nailed Brexit. Okay, so I'm pretty sure most of you, if you've been following the markets, were aware of what happened on Brexit. Brexit was much like the presidential U.S. election later that year, where there was an unexpected outcome that occurred, and markets went actually crazy because of it, right? And I remember the night super well because the time we were getting ready to go out to some sort of special dinner. I can't remember exactly what the dinner was at the time. And I, like everyone else, thought that the event would be somewhat of a snore. It was expected that it would not pass and that the pound would probably remain strong. But I got an extreme turn sell signal, and I'll explain to you what that is in just a little bit. We'll go through what that signal is. And because I have traded it for so long and just trusted it, I just put it in, put a stop slightly above price based on risk management. We won't get into any kind of risk management or sizing or anything today. That's not really important. in my opinion, the 95% of the battle is coming up with just reasons for entry at the right time. You can size and handle risk management later. Risk management is going to be the largest contributor to you honing your skills and staying in the game, and then sizing is going to be the largest contributor to your next level growth. But everything really starts with a signal. Anyhow, put that on there. And at the time, I have since had much larger futures trades, but at the time that was my largest single futures trade for 4 contracts. I came back from a sushi dinner and the account was literally up, as you can see, about $15,000 there, and the pound continued to fall even further. And all of that was just because of the signal. I didn't have to care at all about what was happening. Obviously, I knew there was an event. I didn't have to worry about filtering out or not trading around events because the signals are the signals, and I have been using these things for over 20 years now, to the point where I can take signals through earnings. I can take signals through any kind of macro market event. It doesn't matter. The technicals behind the signals, when I say work, they have the probabilities that they have in all market conditions and all accounts. So anyway, that was pretty cool. Just an example of a night where a signal occurred. I didn't have to think about it, and trade worked out pretty nicely. Okay, so let's talk about the framework for this formula. I call it the framework formula, and here's the ingredients. This is really, really simple. I like the fact that most of you in here said that you are predominantly using technical indicators. So for those of you that do that, this should be dead simple. Okay, so the first thing is we want 1 part trend line, okay? The most debated and often difficult thing for so many traders is to identify trend, and I'm not exactly sure why. So after millions and millions of lines of codes and backtesting and working with 2 of what I believe to be some of the sharpest traders you'll probably never heard of. One of them is a really good friend of mine, multi-million-dollar trader, doesn't provide any courses or classes or do anything out in the marketplace. But a lot of what I owe my success to is the millions of backtests we did to come up with this. So anyhow, again, nothing here is super special. It's just a Fibonacci sequence number. It's a 233 EMA. Okay, so a 233 EMA, exponential moving average, is what I use as a trend filter on every time frame. How cool is that? You want a daily, put your 233 on there. You want an hourly, put your 233 on there. You want to trade a 5-minute chart, which I don't particularly do, 233. That's your trend. You buy above it, you sell below it. That's your trend line. Okay, now I can tell you that I have ultimate faith and belief in this particular trend filter, but ultimately that's where the work comes in, because what works so well is when you develop the belief by applying anything. And again, you don't take my word for it. We'll take a look at some examples, but the 233 is the trend line. Okay. The next is we're going to put 1 part RSI, 3 period, 88 upper, 12 lower. Okay, and I'll show you this in just a second. Maybe not the RSI because I have that all programmed in, but just again, go through it. First is 1 part trend line, 233 MA, and then we want an RSI with a 3 period and 88 upper lower. And that is it. Okay, I have a lot of volume profile and other things. We'll take a look at a few of those. So let's just go to the charts right now. Okay, I'm going to come over here to a QQQ chart. Market is open, which is nice. All right, and here is just pure price action. Right, we're on a 1-hour chart of the QQQ. All right, I'm sure all of you are following the markets. Markets are in a nice uptrend, certainly since the election, and you can probably just visually look at this chart and pick some levels down here. This looks pretty nice, right? But this pullback here, was this pullback to be buyable? Yeah, maybe it filled the gap right in here, right? So you can trade pure price action without looking at anything here. The challenge for me is that, again, I'd have to come in here and look at this if I didn't do anything. So the first thing I want to do is just apply a 233 EMA. Okay, there's a 233 EMA. So on this 1-hour chart on the QQQs on a 233 EMA, am I supposed to be a buyer or seller? Only buying, right? There's no way I would want to short this market using this particular strategy, which is just using the T line as a filter. Okay, this is actually a strategy. You can put a 233 EMA on there, okay, and buy the touch of the 233 EMA. There's on a 1-hour. Okay, I'm not making this up. We can go to any symbol or anything like this. So what I have is an automated signal and alert on TradingView. I also have it on TradeStation and NinjaTrader. Today we're only going to talk about TradingView. By the way, this is TradingView. Give me a Y if you're familiar with TradingView, or an N if you're not. I just want to know how many people know about TradingView. Yes, no, yes, no, yes, no. Okay. I'm going to make a big, bold statement, okay? You have to have a TradingView account, okay? You must go get a TradingView account if you don't have one. When this thing is over, go to tradingview.com. Better yet, wait till the very end. If you end up getting involved in what I do for a ridiculously compelling way, I'll guide you towards everything you need to know about TradingView. But TradingView for charting and analysis, web-based for all the instruments and classes. Now look, there's nothing wrong if you use whatever the heck you use, right? A lot of people like to have their charting be the same thing that they do their order execution on, and I get it. But for charting and analysis, you want to be familiar with TradingView, okay? So this is TradingView right here. I applied a 233 EMA. This is our T-line. You can apply it to anything that you want. Okay, so on this chart with this time frame, and I'm not cherry picking, I just started on the Qs here. Here's your buy right here, and obviously it worked great. Okay, if you want to look at shorts, not really something I'd want to short, but whoa, there you go, another one, another one, another one. So imagine if all you had was something that you picked your time frame. I'm on a 1 hour. Maybe you don't want to do a 1 hour. Maybe you want to do a 4 hour. Maybe you want to do a 15-minute or whatever. And you're alerted every time your QQQs go down to your T line, and you just buy the 50 delta option, or you buy 100 shares of QQQ, or you do whatever you want to express that particular trade. All right. So there you go. Break above, close above. This is not a signal for me because I don't use any buy stops. I'm long here, I'm long here, I'm long here, and I get stopped out. Okay, we got to point out the losers. I'm long here, and that's the last signal that we had, which is back on the 11th. You want to go to a 4 hour, watch what happens with the 4 hour. Last signal we had with the 4 hour was back on April 21st. Since then, we got close, but we did not get any buy signals down here, okay? And that's on the QQQ. And here's the SPY, okay? How good is that? Right there, 327.55s. You took a teeny amount of heat, and I'm on a 4 hour right now, okay? And I know this is dead ass simple. It is, everybody. It's dead ass simple. Find a time frame, take my word for it, and try a 233, not a 200 or 150 SMA or 155 or 55. Try a 233. Let's look at it on a 30-minute. Okay, on a 30-minute, on the SPY, we have no signals of WID trend pullbacks to that area right there. All right, so we're just starting with the 233 EMA. Go to anything you want. Okay, this one's not quite as clean. Break above, close above, comes back. Here's your first long on a 30-minute on Apple. I don't know, 115 to $5. If you can't make money on $5, you might want to give up. Okay, here's another little bounce. Here's your first stop out. This is a loss, okay, for sure. This is unbelievable. Let me widen this up a little bit. Break above, close above, come back down, touch the T-line to the damn tick. 116.88 to the tick. Why don't we go to the right here? 120.42 to the tick. Okay. Hopefully, you want to throw out a symbol. Does anyone want me to look at a symbol? And again, we can go to any time frame. You want to go to a 4 hour? Go to a 4 hour. No signal on a 4 hour. If you're a 4 hour trend trader with Apple, you haven't had. Let's go to Amazon. Okay. I don't trade Amazon, but we'll go to Amazon. There you go. You go back here. Okay. So your first buy using the framework of a 233 EMA and a 4 hour is your long Amazon from 29.72.80. Here's what's also good about this. This is built-in patience. Like if you can't be patient and have no signal in Amazon on a 4 hour for the entire year until you get to here, then don't trade Amazon on a 4 hour. go to a lower time frame, do something else. Okay, here's the other thing. Why in the world would anyone short this? Don't try to pick tops, everybody. And by the way, I'm as guilty as, like, I was very, very short the Qs into so much heat this year, and I keep getting rewarded because we do get some big pullbacks. So I'm just saying, though, to keeping things simple and starting. So there it is at Amazon. Yeah, so member, whatever. So today, for today's presentation, I'm only going to talk about entry logic, not necessarily, because there's so many ways to express a trade. So not about sizing, not about risk management, not about stops, not about anything like that. I will tell you, for myself personally, when I do an options trade, you'll never see me do an iron condor or butterfly or anything like that. Nothing wrong with that. I've been trading options for 25 years. Unlike the guy on the jet who's just been indicted by the by the FTC, if you know who I'm talking about. I'm the biggest on. Anyway, unlike that guy, I actually do trade a lot of options, and I keep my stuff super simple. I'm usually 50 delta. I risk about 35% to 50% of the premium paid, and I'm looking for basically about the same. So to answer your question, the the challenge when you're an options trader and you're using a signal entry is that options are multidimensional, right? So anyway, the bottom line is, for today's presentation, I can't get into all of that, but if you join the Traders Dev group, we'll be sure to tell you how we manage size, risk, targets, all those good things. Today, we're just talking about entries, and there's a 4-hour entry long on Amazon right at that level. Okay, so this is a 233 EMA. You can apply it on any chart. All right, you can apply it on any chart. All right, so that's the first piece. Let's go to gold, and then we'll just be done with this. I think you'll get the example. Okay, so here on gold, there's a potentially little win. This is definitely a stop out. And now you actually can look to short gold on the bottom of the T line. I won't give any short examples. Obviously, short is the exact opposite. If price is below the T line and comes up to the T line, then you look to get short at the T line. Okay, so that's the first. Now the next that we want to apply is a RSI. Let me see if I can just do this in real time. Here on TradingView, you go to indicators. You're going to go to built-ins. You're going to type in relative strength. Obviously, many of you have probably seen plenty of stuff on relative strength. Okay, this comes up. It's pretty darn ugly. Okay, I want to go to the settings. I'll keep it purple. I don't care. But the inputs, I'm going to go with a 3 RSI. Okay. And where do I set these things? I should probably have known that. Here we go, 88 and 12. Okay, I have all this programmed, so I don't do this very often. Okay, so there's 88 and 12. Okie dokie. So I won't have time today to go through all of this. I'm sure some of you have seen some things on RSI. I'm often surprised at how often people will look at it and then think it's too simple, and then just move away from it without really investing the time to watch market tendencies of when the RSI actually can help you out. So anyhow, the way to interpret this, gang, is whenever you're above 88 on the 3 RSI, the market is quote unquote overbought, and you could potentially look for a pullback. I don't want to be shorting anything, though. All I'm interested in is the ability to, since if I'm on a 4-hour on the QQQs and I have no signal on this whole chart, right? Because I will never have gotten a notification all the way since maybe back in April. I will never have a long signal here on the QQQs because it never hit the 233 EMA. However, I can have all kinds of signals that would occur on when the RSI 3 got below 12. Okay, so right here I'd be notified, right here I'd be notified, right here I'd be notified, and then you can just see what was the movement. Did we then find a short-term bottom and move higher? And you'll find that very often the time is. And you can experiment with others. 5 period, 7 period, I experiment with a number of others. Let me just hide this for a moment and show you what I actually use, which is the extreme turn right here, okay? This is gonna get a little sloppy, okay? It's gonna get a little sloppy, but all I'm doing right here now is letting the computer actually tell me when those particular conditions exist. And for here, I'm doing both longs and shorts, right? And I'm not cherry picking anything. So obviously this is a really nice short here, right? I'm not a huge fan of shorting against trend, but on a 4-hour here, this picked a beautiful stop target. And you could go to when you got an extreme term buy here. The ultimate thing that I'm looking for and what I've trained the computer to look for is I want to look for extreme turn buy signals at or near the T line, because that's like the mega, right? So I'm on a 4-hour right here. There it is. Bam. This is the signal of all signals for what I do. Okay. Market comes back down to my 233 EMA. I'm getting an extreme turn buy right here because the RSI is the condition that I'm looking for. And there's some other logic built into this too, the secret sauce, right? You get to understand it if you become a member of TDG, Total Dev, the Traders Dev Group. This is the ultimate buy signal. Okay, and I can hunt around all I want, but what's better is just to have software running in the backward that's screening this against thousands of symbols, right? Okay, now I don't actually offer a screener like that. I don't recommend it because here's why. You're also probably going to be better served by becoming a specialist in just a couple different names. It is hard enough to hone the skill of trading, let alone, and look, I don't want to be disparaging about any other approach. It can all kind of work. But this concept of watch lists that I see in so many rooms every day, where you're watching different stocks every single day because they're moving and things. The Qs and the SPYs and the IWM and the futures move every single day, all the time. Bank of America and Apple and Tesla and pick 10 or 20 or other stocks, they move all the time. So you can sort of become a specialist. So I'm not actually screening thousands of stocks. I'm just looking for signals that can occur in a couple different markets. So there it is on the SPY. Now, someone asked for, yeah, can you apply a 233 on a daily? Let's look at, I'm going to, whoops, sorry, I hope that didn't come up. I don't think I have a whole lot of time left. I mean, Anna, if you're listening to me, what's my time slot? Do I get to go till 9:30?
You have 12 minutes left.
I have 12 minutes left, okay. Time flies when you're having fun. All right, let me show you this really quickly. I'm going to come in here and come over here to profile. I'm going to open this up over here, and hopefully that will work. Let me see. Got a little bit of delay. Okay, so after you go get your TradingView account, you want to go over, and here's an account. This is all free, by the way. You're going to search for TDG on TView, which is me and our group. That's TDG on TView. Okay, you're going to search for that, and then just go ahead and hit the follow button right there. Totally free, because we publish an idea about once a week, and the question was, does this 233 work on a daily? I wanted to show, oh, actually, I don't think it was a 233 signal. It was an extreme turn. Sorry. So we'll look at the 233 on a daily in just a second. But this is an example I wanted to bring up because it was an idea that we highlighted, and I kept on here the actual trade that we did, which is September 340, 332. So this is an extreme turn sell, and it was on a daily, and it was the first one that we got in the entire move from the COVID lows. Okay, so stayed out of, there was no signals to get short this entire move. Okay, this is a 233 EMA here, so there's, you know, this worked as some resistance here. Here's where you can buy. But anyway, this was a 340, 332, and I won't play this down, but the market fell directly from here. And this 113 put blew all the way through 332. We took it off for about $7.25, almost about a 700% return. Now this is on a daily, and that's how long it took. Now there are ideas using exactly the same thing that we're talking about here all throughout here. By the way, check out gold. This is gold on a daily. This is the perfect thing that we look for. A pullback to the T line. This is a 233 EMA on a daily. Okay, right back to gold. And if you don't follow the gold markets, this was 1780s. It was just back right around Thanksgiving, the early part of after Thanksgiving. Gold market rallied $88 in a straight line from here. Okay, it's since come in. Look at this, $88 in a straight line. Okay, we had GLD, we had MGC, we had GC, and what I would like to point out is this was the first signal that we had with trend buy signal in months and months and months and months. Months and months and months. Right there, perfect buy signal. 233 EMA, RSI overbought, and an ADX setting that we look for as well. TDG on TradingView, and you can go over there and find out all about that. So actually, let's look at a daily. Apple's always one that people love. I'm going to delete this so we get that out of the way. All right, so there's a daily on Apple. The last time that you had a break above right here, April 6th was your buy at 62.29. Okay, and you can damn well know that I will be buying Apple at 97.71 if and when we get back down there. That'd be gap fill and everything. Okay, some people like an 8-hour as well. So anyway, you can use the 233 on any time period. And if it hadn't been millions and millions of back tests across all kinds of filters and everything else, I wouldn't confidently be able to say what kind of makes my skin crawl some other times, where I hear things like this works on every market and every time frame and every this, that. There's not a lot of things that work that way, but I've built the confidence for myself in something like this. Okay, so the takeaways from today was 233 is your trend filter, and we've only looked at long examples because the market has predominantly been very constructive to the long side. That can change at any time. You can go back and look at the March and April period, and certainly the February fall off, and find plenty of examples on 4 hours and 2 hours and 30-minute time frames where the T line got you done really well. Like as an example here, if we go over to natural gas, let me just go over to natural gas just as an example. I don't know if I have the continual contract on here. Here it is. Okay, this is an 8-hour natural gas, okay? 233 EMA, pick any point you want. Let's come over here. Look at this extreme turn buy. It's almost at the T line, nice upward sloping T line, extreme turn buy, gets you done, beautiful right there. You buy it right here, there's no extreme turn buy, and you know, again, I know many of you, well, how do you manage your risk and where does it go? I'm just talking about signals and entries. There's a long there. Now you get a break below, close below. Now this is a short, bam, comes back up. Now, by the way, I'm talking about to the tick. We put envelopes around this as well. There's a short right there. So here's an example of natural gas, which I knew was one market that actually had declined. I'm almost out of time. Yes, okay, so here's how you get, all right, all right, let's do this. Traders Dev Group, our mission is just want to be accountable, transparent, and work with people that are potentially committed to the craft of honing their skills, okay? So what TDG Total Access is, and the only thing that we offer anymore, I have all kinds of stuff, but we just simplified it down to something that we call TDG Total Access. So it's just a bundle of services, education, materials, custom indicators to provide a framework for you to find turning points, momentum areas, and trends, all with precision and no guesswork, okay? So here is what it actually is. It's what we call just sort of a mega membership, all right? So what it is it's we have a trading room. Not everyone can be in a trading room, and honestly, you come into our trading room, there's a decent amount of work you need to do to make any sense of it, okay? So it's included in the mega membership, but I wanna be very, very clear, it's a professional trading room. All right, so if you're a beginner, there's no problem. If you spend first the time to go through all the courses and everything you get access to for part of this, you'll be okay to get in there, but it's gonna be like coming into the middle of a movie, because you can probably already tell from me, I talk a lot, I talk pretty fast, and there are, I will on a daily basis generally trade somewhere around 1,000 contracts, which is way more than anyone could be able to follow, and I'm trading 20 different markets. So the feedback I do get from a lot of people is it's just too much and overwhelming. So I want to be clear about that. It's a professional trading room, but I make the access so accessible. That's just one component of it. Sorry, we're doing work on the house, and now these guys are crawling around in our attic. So anyway, TDG Total Access includes the Pro Trading Room, all kinds of powerful ideas that you get on our private Discord channel, learning and courses. We have 3 different courses, including Futures on Fire Foundation course, which I used to charge like $497 for. That's absolutely included as well. You get the trading strategies, the templates, the workspaces, everything we talked about. You get the custom hybrid indicators and signals for TradingView that we talked about. So if you want to have this signal appear on your chart, that's all included as well. And where else? I lost my, I'm over here. There we go. We have weekly technical analysis trading. We have all those TDG TradingView things in action. A lot of all other performance boosters and things like that. It's going to be $97 a month. The Traders Expo thing today is $49 for your first month. You can cancel at any time before it renews. I know it's not everyone's cup of tea, but I don't know, I always laugh because my mentors, anyway, until a couple of years ago, the 3 of us used to work individually with traders for $25,000, and now almost all of this is being presented on a monthly basis. Consume it as you'd like for this this kind of fee. It's cool because I love helping people out, and I think if you take a look at this, it could very well help you out as well. We have a bunch of clients and things you can check out on this page as well. So this actual page is, I'll drop it in here. It's tradersdevgroup.com/expo. How do I type it in there? I think I put it right here. How many trades, days a week? It's overwhelming. So I just want to be honest. So the way to work best with Traders Dev Group is to come in on this very low introductory offer, start to go through the courses, pop in the trade room, see if any of it resonates with you. Because again, I want to be a straight shooter here. A lot of what we do will overwhelm beginners. Okay, but for $49 to get an access to what's going on in here, it could be pretty powerful. And again, what I shared with you is just sort of the tip of the iceberg. There's plenty of other little tips and tricks that we have about other little tweaks that you can do to these filters. If nothing else, you can come in and watch us trade the extreme turn and the T-line and just see if you can apply that to your own trading. Does it work for scalping? It works for anything, but I'm not a scalper, so you won't see us do much scalping. Can I please drop the link there? I think I dropped it in the chat. That's to organizers and panelists. Okay, where do I put it in send to all? Anna, can you help me out? How do I get that link to?
Sure, I'll do this for you.
Okay, thank you.
Done.
Awesome, cool. Well, my time is about up. I really appreciate it, everybody. TradersDevGroup.com. Also, you can go over. My name is Rod, and Rod at Traders Dev Group as well is. I don't mind fielding emails directly from anyone. Okay. Thanks, everybody. Have a super rest of your trading day. TradingView, 233 EMA, RSI, 3-period, 88 and 12. Apply that to some time frames. See what it does for you. See if you start to see any visual price patterns or things that emerge that could help you out. If you'd like to see it all in action, we'd love to see you as a member of the Traders Dev Group.
Hey, what's going on? How's everybody doing? AK in the house. I don't really do a lot of webinars during the day because I'm usually busy at the gym or the dog park after my time of training. But I want to talk about something that we've been working on for about the last decade, and after basically writing all the algorithm coding for this, we have finally launched it. Today will be the last day we ever sell it for this price. Actually, we'll sell it till like Saturday, and then after that, it will just be gone because we are just getting too many people to sign up for this, and we really don't want to take, we want to get the people in that want to take their trading seriously. I'm in this industry just because more or less there's a lot of really good gurus in the industry. There's also a lot of gurus that I would not really listen to. I'll never give names and stuff like that, but it is my goal is to get everybody to the trading level where they need to be. So I'll show you guys today. This is all about day trading, so you can use this to day trade stocks or options. None of these are meant for swing trades, and this is our VIP day trade launch party. I'm very excited to present in front of you guys today. Little risk disclaimer, we have to put this in every single webinar. Short-term trading, option trading, and futures tradings are extremely risky undertaking. They are generally not appropriate for someone with little capital, little to no trading experience, and low tolerance of risk. Never execute a trade unless you're willing and prepared to lose your entire investment. I trade options. The reason I trade options is when I buy an option, the most I can ever lose is what I pay for that option. When you sell options naked, you can blow out your account. When you trade stocks naked, you can lose a lot of money. When you trade futures naked, you can lose a lot of money. I only buy options, and this strategy we're teaching you has been on fire. There was one signal today, good for 25% profit. I'll show you that signal on a proprietary-based day trade scanner. All trades are for educational purposes only. Contact your broker, your registered investment advisor for execution margin and other capital requirements. Everybody watching today's presentation adheres to all risk disclaimers on www.optionhacker.com and www.alphashark.com. I trade on a simulated account now. I do have a real dollar account, but the trades that I recommend that I send to subscribers are on a simulated account, and the reason for that is I've gotten too big as a trader and an influencer. I used to trade on probably like a $400,000 account, and if I put on 400 options or 500 options, I'm going to move the market, and I don't want that. So the only reason I actually take the trades in a simulated account so I can mimic the trades and I can kind of follow them and track them. So we have a problem, okay? You guys are here for one reason and one reason only. That is to make more money trading. As Jim Cramer says, we're not here to save the manatees. Maybe we'll save the manatees one day, but not today. All I want to do is make more money trading. If you think about it, one person goes long, the other person has to be short, right? If one person is short, the other person has to go long. It would make sense that 50-50. 50% of the people make money, 50% of the traders lose money. That is not necessarily true though, okay? 90% of all retail traders lose money, but the institutions, they don't lose money. Why do they not lose money? Because they trade on insider information that we do not have access to. If you think that insiders are not trading on insider information, you can go leave, because they all are, okay? Billions, a show about insider trading. Martha Stewart went to jail. They went after Mark Cuban. They went after Leon Cooperman. The insiders are trading on information and technology that we do not have as a retail trader. For the first time ever, in my opinion, we are leveling the playing field. How are we leveling the playing field? We're doing it because we are able to see what the biggest and best traders in the world are doing on their trades. These are potentially hedge fund managers, options that we watch. Carl Icahn, David Einhorn, and Bill Ackman. These are the biggest and best traders in the world. I do not know who Carl Icahn is. He probably has no idea who Andrew Keene is. I don't know why he would. But if Carl Icahn was to text me and say, hey, Kay, I'm going to put a $1 million bet on in Comcast A. Do you want a piece of the position? I'd say, you're Carl Icahn. Of course I want a piece of the position. No more reading news. No more staring at charts. No more countless hours figuring out why you're not making money trading. This is simple. It's easy. It's concrete. All we're doing is watching for order flow in the option market, okay? We're waiting for option flow in the option market. Simple and easy. Institutions have more edge than we do. They have access to information, technology, manpower, and capital. And that is why they have an edge. That's why they're consistently getting in trouble for trading the way that they trade. So this is an example, and I'll show you the one signal today. The one signal today was a winner of institutional order flow or just a big trader. Some trader somewhere in the world came in and bought as a day trade or swing trade. We don't know what they did, but our scanner flags us as a day trade. Trader buys 2,435 PLUG, November 13th, 2020, 23 calls for 14 cents. Our scanner, the only place you can get an unusual option activity scanner in the world for day trading is through us, and that I know of. Not 100% sure. And we see here, trader buys 2,435 PLUG, copy and paste from our scanner. November 13th, 2020, 23 calls for 14 cents. What this tells us, it tells us if they're bought or sold. Shows me my trade size, and these arrows are a little bit off, so just apologize for that. Symbol, expiration, strike, type, price traded, and open or closing. Okay, I'll show you the example from today. That trade made 25% profit. For subscribers, they had the day trade scanner. How would you like to make 25% profit potentially in a minute, 20 minutes, 50 minutes, an hour, 2 hours, okay? And that is possible when you trade with reading the tape. So you can think about this as two ways. You can think about it as the first way, which is reading the tape. Okay, you are reading the tape to figure out if a trade is good or not, okay? So you're reading the tape and saying, do I want to take the signal? If you don't know how to trade options, you don't need to know how to trade options, okay? We will send you a proprietary base top to bottom option course that is 9 chapters long. It's about 2.5 hours long. I'll throw that in as a bonus today. So everybody that signs up for the scanner will get the bonus course on how to trade options. So gives us proprietary base stop losses and profit targets. Your stop loss is always going to be based on the price that you pay for the option. You could get in this trade for $14. $14 you could get in this trade, okay? Stop loss, half the price of what you pay for the option. Your stop loss would be 7 cents. Profit targets, 17 and 21. So this is simple, it's easy, it's concrete. You know where to get in, you know where to get out. A one lot would have been $14. $14 you could have got in this trade, guys. $14 you could have got in this trade here in plug. Let's see what happened. Here is a screenshot. Like I said, I do trade through a simulated account. We see here, buy, plug calls, 14 cents. That's $14 per one lot. Within a minute, less than a minute, 14 to 17. How much is that? That's 3 divided by 14, 25% profit. 25% profit on the signal. Then 2 hours later, 2 hours and like 10 minutes later, 21 cents. This option went up 50% in 2 hours. I invest a lot of my own capital. I don't invest any outside capital. And you know, I'm basically trying to make 10% a year. My goal is to make 10% a year in my capital that I invest in. Well, this one signal, you could have made 50% potentially in just 2 hours. How did I know to take this signal? The scanner told me what the signal was. It told me my proprietary base targets, and it told me my stop loss. No more guessing for trades. No more reading charts. No more reading news. Just looking at the scanner, analyzing, and dissecting the trade. So you say to yourself, AK, this looks amazing. How do I get these signals? And how can these help as a trader? Most of you guys are losing money for a couple of reasons. Number one, you're setting up improper reward to risk setups. Number two, you're trading against the trend. And number three, you're not getting your trades from reading the tape. You're randomly looking at the chart. I'm guessing out of almost 150 people here, nobody here is a charted market technician. I'm not a charted market technician. I don't care. I don't care what the news says. I don't care what the chart says. All I care is about if someone's making a massive position in a certain stock in the derivative market. If I knew a stock was going to go from 20 to 30, yes, I could buy stock. I make 50%, but I could buy options and potentially make 200% windfall, 300% windfall, even 800% windfall. So this is a way of day trading and not worrying about what happens overnight. We had 2 day trades yesterday. And let me show you these from yesterday. These hit our proprietary base scanner. I don't even own the technology. I licensed the technology from a bigger player. So we saw one yesterday. Let's see what we saw. Actually, here's from it's from yesterday or 2 days ago. It's from the 9th, yesterday. Okay. So these were our day trades from yesterday. Okay. Someone buys RRC December 11th, 7.5 calls for this week. So this week, 7.5 calls. They buy them for 8 cents or $8 per one lot. I wrote market color. I said 50% profits in minutes. Hit proprietary base target 11 and hit proprietary base target 23. We had another one in Morgan Stanley. Buy Morgan Stanley 12/11, expire tomorrow. 67 calls for 20 cents. Profit target 1 hit right off the bat. Then stop loss hit on the other one. So these were 2 trades. If you follow these in at the exact same time, it hit the scanner. On this trade, you would have made 25%. You would have made 50%. So that would have netted you out to 37.5. And this is just from yesterday. And then this one, you would have lost 50%. And then you would have made 25%. So you would have lost 12%. So total on 2 trades in an hour and a half, you would have made 25% profit. We had a signal today that made another 25% profit. Imagine slowly growing your account day after day after day. We suggest taking all these trades off in the first hour and a half of the day. So signals will split out for the first hour, and then we say, hey, it's okay to take off 30 minutes after the fact. Okay. Here's a signal in GILD, otherwise known as Z-Gilead. Trader buys 500 GILD, 10, 23, 63 calls for 23 cents. Okay. So someone buys 500 GILD, 10, 23, 63 calls for 23 cents. Stock was trading 61.51. This order hit the tape. The options expire this week. They hit only 2 seconds after the open. Every trade you could have gotten for $23. $23 you could have gotten in this trade. Let's see what the results of this trade. This is in a simulated account. This is not real money. $2,100 profit. Coincidentally, right after this trader took the trade, the options started going up in value. How do they know? Well, I think they have information to technology that we do not have as retail traders. GILD gives you exactly which option, which strike, which expiration to buy. Literally tells you GILD 1023, 63 calls. Tells you exactly what price to get in the mat. 23 gives you a proprietary base stop loss just in case the trade goes against us. And then proprietary base targets based on our entry, 29 and 34. There you go. How do you tell unusual option activity are acts of speculation or hedging against other positions? Great question. We never know if this trader is taking a trade as speculation or hedge, but using our algorithm that I wrote helps us get rid of the speculative trades. Some things filters we use are volume versus open interest. Other filters are delta, expiration, dollar amount, stock volume. All those go into the algorithm, and the algorithm will spit out the trade for you every single day on a day trade. Hour and a half, you're in, you're out. I spend more time at the gym than I do trading. I spend more time at the dog park than I do trading. And I want to teach everybody a new wave of trading, okay? Stop looking at charts. Stop reading news. None of that matters, okay? In hindsight, I could do a video every day that's like, hey, look at this chart. I knew we were going to double bottom here. I'm just making up random stuff. It's not true. Here's the signal in Uber. This hit our scanner. Copy and paste from our scanner, okay? Trader, somewhere in the world, we never know their stock or option position. Buys 2,465. UBER, Uber, November 13th, 2020, 45 calls for 24 cents. Do we know that they're taking this as a speculation? We have no idea. But on a reward risk setup, We can buy this trade for less than $25 per one lot. This order hit the tape on Thursday. Let's see what happens. Boom, rips to the upside. Look at this, 24 cents. These went up to 70 cents this day. Every $240 you invest in the signal could have turned into $700. $2,400 could have turned into $7,000. You're in, you're out. Easy and simple. This trade on my simulated account made $2,100 in less than 20 minutes. Okay, these options already traded as high as 60 cents. Here's another signal, day trade signal. I'll show you guys a signal from today. An example from today. If you had our day trade scanner, you could have made 25% in less than 10 minutes. Day trade, trader buys 512. WBA, Walgreens Boot Alliance. November 13th, 42 calls for 33 cents. So the right but not obligation to control 51,000 shares of WBA between now and November 13th expiration. For that right, they paid 33 cents. You could have gotten this trade for $33 per one lot. That's it. $33 per one lot you could have gotten in this trade. As you can see here, my simulated account, I got them at 31, sold them at 45. 31 to 45 is about 50% profit. Look at how long that took. About a minute and 3 seconds. Then I wanted to leave for the day. I said, I don't want to have this trade on anymore. So I'm going to sell them for 38. 31 to 38, it's about 20% profit. So easy to read, simple signal, guys. The scanner literally looks like this. Tells you the quantity, tells you the stop, tells you the expiration, tells you the strike, tells you the price they traded on the trading floor, okay? And then it tells you proprietary targets and your stop loss. So here's WBA. Once again, on my simulated account, so I don't want to be buying the option and then selling them to my own customers. So I just track it on a sim account. $2,191. $2,190 in WBA. Simple, guys. Here's SPCE. Trader buys 308. You don't have to worry about any of the algorithm on the back end. The algorithm tells you what stop, what expiration, what strike, and what price to pay. Here you can see SPCE. It's a little bit smaller trade. In at 57, out at 73. That moved in less than 4 minutes. Then I took a stop at 45 because I wanted to go to the gym. That trade, a little bit smaller, just made a couple $100 in that trade. And I'll show you guys the signal from today. So you say to yourself, AK, this sounds great, but why should I take these trades? Why? Why are these better than any other signals out there? Simple. The hedge funds and big traders have more information than us. And that is why they're always getting in trouble for insider information, okay? So the hedge funds have access to information and technology that we do not have as a retail trader. For the first time ever, we are leveling the playing field. We're saying, hey, we can now get into these trades that we couldn't have got in before, okay? Because we can watch them trade in real time. I think of this as two ways. Number one, it's like reading the tape. It's like looking who's the best trader in the world and mimicking their positions. No more guessing. No more randomly taking trades. Just following the smartest people in the world. Trade with the pros. Imagine knowing Carl Icahn and David Einhorn's positions before they are disclosed. And the best part, even if they're trading on insider information, all of our trades are public information. So every single trade, once it hits the trading floor, it becomes a public order. So you say to yourself, this is amazing. Where do I go? Let me show you guys the signal from today. One trade, one signal, one winner. says day trade, and this is what you'll actually get. So you'll get roughly about 2 trades a day. You're gonna get about 50 trades per month, okay? 50 trades per month. Day trade, buy, ABB, okay? I don't even know what the stock does. I don't care. All I know is some trader bought a bunch of calls. December 28th, 28 calls for 15-cent debit. Stock was trading $26.95 at the time. Let's see where these calls are right now, okay? They're 20 bid at 25. So you could have got into this trade at $15 per one lot, out at 20. That is 33% profit. So we see volume is now 30,000. 30,000 of these options trade. ABB, December 18th, 2020, 28 calls. Our scanner picked them up before anybody else. It could be mentioned on CNBC right now. I have no idea if it's going to be mentioned on CNBC. But the scanner got us in at 15 cents. $15 per one lot could have got you in that trade. If you had that trade, $150 would have turned into 200. 1,500 would have turned into 2,000. 15,000 would have turned into 20,000 on one signal. You're going to get up to 50 trades per month, guys, using the scanner. So how do we filter these trades? Option scanners have never been available to the retail trader before. Even the best professional traders have not been able to create a scanner of this caliber until right now. You don't have to worry about any of the back-end algorithm or filters. We do all the hard work for you. All you have to do is watch the signals go across the tape, put the signals on if you like the trade, and hopefully you'll watch your net worth go up. This technology has taken us about 12 years to build since I left the trading floor, and 50 plus years of trading experience. There's a lot of scanners available. To my knowledge, there's nothing available real-time live that will spit out signals. Like I could go to bar chart and let me go to bar chart and I'll just show you how worthless this is. So this is bar chart. I can go to options. I can go to unusual option activity. Okay. This doesn't come out in real time. And what is this going to do for you? This isn't a scanner. This doesn't spit out one trade. This tells you everything. There's 482 trades here. Okay. 482 trades here. There's nothing actionable there. This is based on unusual option activity. Our scanner will spit out the signals. Maybe some days there won't be signals. Maybe some days there'll be 3 signals. Okay. And this gave us the one signal. That trade was up 33%. You made 33% in an hour, guys. Does that sound pretty good to you? Because that sounds pretty good to me. Option scanners have never been available to the retail trader. Even the best professional traders have not been able to create a scanner of this caliber until right now. Day trade scanner sifts through the noise and gives you the best potential trades of the day. If there's no signals, it won't put out a signal. If you look at how the regular scanner produces signals, this is my regular scanner, okay? So look at this, guys, 8 to 1,200 trades. Basically, I had a sales guy that said to me, AK, what about if we could go through your head and just pick out which ones you think is the best and create a scanner so people don't have to go through all this noise. And this scanner is $500 a month, okay? Well, simple, you want to be following the smart money. You want to be following the smart money, okay? Those are the smartest people in the world. Here's how it looks if you looked at every single signal. Even professional traders have had trouble scanning through thousands of trades. Day trade scanner takes the guesswork out of trading and produces the best potential signals daily. It makes them actionable for any trader of any skill level, novice to expert. Stop guessing. Stop taking bad trades and losing money. Get the best potential, bullish and bearish signals daily, okay? Get potentially the best setups daily through the day trade scanner. So this is the easy to read format. I write market color on all the trades. Okay, one trade today, 33% profit. And look what's happening. The market's going lower right now. That's good. We're already out of this trade. On to the next trade. That's it. That's all of it. Those are the best potential trades the trader can get into. Nearly 75% of our subscribers that bought the first month renewed their subscription. That is how good it is. So let's talk about how we create the signals and how they are filtered. So we run a back-end algorithm that only spits out the best potential setups of the day. Due to the sensitive nature, we cannot disclose specific using our proprietary base filters, but here are some of the filters we use to produce our signals. Average daily volume versus underlying stock, option volume versus average volume, option delta, option expiration, price, and stock volume. Those are some of the criteria that go into the algorithm to only spit out the best potential signals of the day. Stock volume is important. The number of shares a stock trades in a day is important when considering a significant order. The more thinly traded the stock, the higher the impact on the order. Option hacker automatically filters out any stock that trades over a certain amount of volume in a day. Gets rid of SPY, XLF, QQQ, VIX, SPX, OEX. These are not examples of unusual option activity. Every single stock has volume and open interest. Volume are how many contracts trade today. Open interest are how many exist before today. All we care about is volume to be greater than open interest. We want the number of contracts traded today to be above how many exist before today. Day trade scanner will only send us a signal if volume is greater than open interest. We need the amount of options traded today to be bigger than how many existed before today. The majority of option participants are hedgers. As we said, day trade scanner goal is to sift out hedge positions. Day trade scanner removes any option that has a longer term bias. Generally, these are not the best signals. So we're looking for volume to be greater than open interest, an order of a minimum 300 lot, dollar amount, expiration amount. On every single trade, you can get in for less than $100 with the potential to make 50% profit in 10 minutes, 20 minutes, 50 minutes. Then, after the first hour of the day, you say, hey, that was fun. Did I make money? Did I lose money? Let's go to the gym. Let's go to the dog park. Okay. I used to stare at my computer all day long. Like when I was on the trading floor, I would never leave. But I used to stare at my computer all day long. And I said to myself, this is stupid. I want to get in, I want to get out, and then I move on to the next day. Day trade, I don't care if the market sells off 30 points in the S&P right now. The trade's already over. I can move on. We have optimized the algorithms that filter the trades with new and improved criteria. All trades will be taken off after the first hour and a half of the day. So the signals are only produced in an hour. One signal today, one winner for 33% profit. You're out of this trade. Doesn't matter where ABB goes anymore. That trade is now over. You got in at 15, you got out at 20, trade is over, on to the next trade. Go enjoy your day. It's raining in Scottsdale right now, so I'm not really enjoying it. It also includes a trading plan, a cheat sheet, and a blueprint. So I'm actually going to throw in a couple bonuses today, and we're going to give you plenty of time to ask questions. Went a little bit shorter today than normal. I've been talking for 4 straight hours. So this is the day trade scanner. This price after this weekend will never be offered ever again, to my knowledge. I mean, there's a chance it will be lowered, but The price of this is going up to $349 a month. Since you guys are on a webinar, you're taking time out of your day to come listen to me speak. I want to say thank you. So this is what you're going to get. This is our proprietary based day trade scanner. I challenge anybody to find me a day trade scanner that filters options on volume versus open interest, stock volume, option volume, price, expiration. It does not exist. So this is everything you're going to get, and we're also going to throw in 2 added bonuses. Bonus number 1, I'm going to give you a 9-chapter. It's called the Top to Bottom course. This is 2.5 hours long. Okay, that is yours to keep for free for life. Okay, so when you purchase this, not if you purchase this, when you purchase this, you'll get the 9-chapter course on how to trade options, how to put stop losses, how to put profit targets in here. We'll give you that 100% free, and that is yours to keep when you sign up. So this is the day trade scanner. You'll get, we'll call it 1 to 6, because today I actually produced 1. 1 to 6 of the best potential bullish and bearish signals of the day. Day trade scanner workshop, trading plan, and blueprint. Cheat sheet and slides. We're also going to give you the 9-chapter course. That is another $999 value. So that's 9-chapter course of how to trade options, how to set up stop losses, how to read the scanner. That is called Top to Bottom course. That is 2.5 hours long. We're going to also give you our unusual option activity master course. We have sold over 10,000 educational courses. Out of the 10,000 educational courses, this is the best course that we have. This is our creme de la creme. We sell it on our website for $1,000. We're throwing in that for free as well. And you guys can get in for $249. We only have 10 spots. My IT guy is on the back end. He's going to cut the link off when we hit to 10 spots. It's optionhacker.com/DW. optionhacker.com/DW. And even if you decide to cancel your membership after the first month, we'll give you both of those courses. Those are yours to keep for free for life. Hey, here's a present. Keep it for free. Okay, so day trade scanner, 1 to 6 of the best potential setups every single day. Day trade scanner workshop, trading plan, blueprint, cheat sheet, plus our unusual option activity workshop. Everything you need to know to trade unusual option activity, plus our brand new, it's taken a decade to build this, top to bottom option course. Literally, we'll show you how to put in stop losses, profit targets, read the scanner. I took my buddy who's never traded an option before, and we had him trading in no time. So this is everything you need to know, guys. This is your course. It's optionhacker.com/DW. And you can see here, 1 signal, 1 winner. Congratulations, new member George. Congratulations, new member Sharon. Congratulations, new member Lee. Congratulations, new member Wayne. We only have 10 spots available, guys, and they're signing up, and they're signing up quickly. Okay, this is everything you need to know on this. You get the day trade scanner. This is a subscription, so you will get billed $249 a month. And like I said, guys, over 75% of the people that took the subscription kept their subscription. Over 75% of the people that bought the subscription kept their subscription because it's that good. This one trade, let's say you bought 100 of these. Okay, if you bet 100 of these, 100 lot, and you would have had a stop loss, you would have risked $1,000. Okay, so you would have risked $1,000 on this one trade. You would have paid for the scanner for 2 months. $500 profit on this one signal. So everything you're going to get is here. Any questions you have, I do have some time left here. You're going to get the day trade scanner. You're going to get 1 to 6 of the best potential setups of the day. You're going to get the trading plan. You're going to get the blueprint. Everything is yours to keep 100% free. I repeat, everything is to keep. Yours 100% free. Even if you don't renew after the first month, you get to keep everything. You got to keep the course. You got to keep the course. You got to keep the top to bottom course, and you get to keep the unusual option activity. So some people sign up just to get all the master courses. Not a bad idea, right? Here's the link, guys. It's optionsonthefloor.com/dayw. In my opinion, I don't think there's anywhere else you can buy a day trade scanner in the world. So if you guys are looking to level the playing field, get into this. I'm just sending out another profit target here. Anybody have any questions at all? The link is www.optionhacker.com/DW. You can use this to day trade stocks. You can use this to day trade options. The results have been amazing so far. Let me just show you here. We started keeping track of everything, and this is not regulated from compliance. So this is everything we have. Yesterday, so we didn't have any signals on the 8th. Yesterday, we had 2 trades. One hit both targets, and then one hit a target and a stop loss. The one signal from today hit profit target, and then it hit the stop loss. So $249 a month, guys. This one signal could have potentially made you 2 months of subscription for free. And does anybody have any questions at all? Does anybody have any questions at all about this? Or forever hold your peace? Questions, questions, questions. Ooh, I see some noodles calls being bought. I love that stock. NDLS. Jan 7.5. All right, guys, I guess I'm a little bit early on time today. 1 to 5 signals a day. 1 to 5 signals per day. Day trade stocks, day trade options. Do it in an hour and a half. Be done with your day. Move on to the next thing. All right, guys, that is it for me today. Everybody have a great day. Make sure you guys sign up. It is optionhacker.com/dayw. optionhacker.com/dayw.
Good morning, traders. This is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci system. In this webinar, we'll be teaching you how to trade like a hedge fund trader with Alpha Fibonacci system, because this is what I do every day. I mentor traders from beginner to hedge fund trader, how to trade Alpha Fibonacci system. But first, very important disclaimer. It is essential to recognize that Fibonacci Trading Institute, my incredible team, and I are not financial advisors. We are not registered with any financial industry regulatory. All the content of education courses, modules, videos are to inspire you, to motivate you, to educate you how to trade like a hedge fund trader. None of the documents of all the charts of all the discussions are not an advice to buy or sell any instrument. Past performance not indicative of future results. All software demonstrated as is. And I certainly hope you understand risks involved in futures, trading, commodities, stocks, any instrument. And you trade only with risks you can afford. When you see what students do all over the world in 57 countries for the last 10 years, including right now, this morning, it does not guarantee your performance. But if they can do it, so can you. In this webinar, we will cover key steps how to trade like a hedge fund trader. We will go over multiple examples of day trading and position trading, stocks, futures, forex. You will see how traders trade Alpha Fibonacci system, and most importantly, how you can trade as a hedge fund trader with proprietary Alpha Fibonacci system. Briefly about myself, I hold multiple degrees, speak multiple languages. I came to US with nothing, with newborn on my hands. Within 10 years, I became multimillionaire. 2004, I was introduced to Fibonacci. I became fascinated. 2008, I developed first proprietary strategy. As of right now, I developed multiple strategies, multiple software. I have traders all over the world, from beginner to hedge fund trader, who trading the system. I founded Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel, Fibonacci Trading community of traders. And this is what traders do and share all over the world. Sam put his daughter through Harvard trading Alpha Fibonacci system. Wolfram inviting me to his wedding. When I meet with Victor in Switzerland, he's fund trading Forex with my system. These are the traders who trading stocks, who trading Forex, who trading options, who trading futures, using all you will see in this webinar. This is a system on S&P mini futures this week. All institutional buy points identified hours and days in advance. This is a system this morning on S&P. Ultimate buy point. As I just finished teaching in the class, let me convert this chart to 5 minutes. One of the most favorite charts to trade. System identified days in advance. This is a place where institutions will be adding to their long. So if you want to trade with institutions and not against them, this morning was 10 out of 10 morning to buy with institutions. And if I convert this chart to 3, this is a system this morning. 5 minutes ago, I finished teaching class with these traders. This is the traders this morning in my class. Richard, 4 points S&P. 1 point S&P $50. On one lot, 4 points $200. Brad has done the same. 10 lots, $2,000. 20 lots, double. Khalid, trading Dow. Richard in the course 5 weeks prior to trading live, he doubled his demo. Khalid chooses to trade Dow. $5.5 per tick on one lot, $100 on 10 lots, $1,000 on 20 lots, $2,000. Jason trading gold and silver. Kenneth trading Bitcoin. This is in class this morning. All of these traders, maximum time, as Richard shared, 4 hours per week. What do these traders do? They trade with institutions. They trade as hedge fund traders, riding institutional train. This morning was the best morning since December 2nd. Alpha Fibonacci system teaching you that. So if you can trade this on 3-minute S&P, you can trade this on 10-minute S&P. System allows you to buy ultimate bottom, to short ultimate top. All minutes, hours, days, weeks, months, and years in advance. But if you choose to trade long-term chart, if you choose to trade on stocks, of course you can. Identical rules apply. And this is what traders do all over the world in 57 countries. They do not chase indicators. They do not chase cheap systems. They trade indicator free. This is what I teach to JP Morgan hedge fund traders and traders of all levels. Pure price for entry and Fibonacci for exit. You will never, ever, ever need anything else. So this 2020 was a stunning example of the most important moment. You cannot trade on the news, can you? There is no good news in the news, is there? In the news, we have only panic. In the news, we have only negativity. But 2020 just became the best year for top 1%. Hedge fund traders are top 1%. Hedge fund traders have been buying the market, not shorting the market. And that's what's essential to recognize and understand. And if I show you this system for the last year, system shown clearly where institutions take in position and how to trade with multi-million, multi-billion dollar train. Here's S&P for the last year with Alpha Fibonacci system. 2020, S&P reaches reversal zone. What does it mean? Expect sell-off. You sleep well at night as Alpha Fibonacci trader. You understand the rules. You understand where to expect the crash and what identifies institutional sell-off. So when market's selling off and market in free fall, what do you see at the bottom? 2200 institutional reversal zone. And when market's selling off, you know, with ultimate precision, despite the horrific news, where opportunity to buy will be, all in advance. March 23rd, the worst Thursday in 40 years, Black Thursday on the news. As strategic Alpha Fibonacci trader, you know, top 1% owns the news channel. Top 1% is not shorting the market. Top 1% buying the bottom. Bullish rally starts at the bottom. But you knew this many, many months ahead. And that's the power of the system. As Goldman, JP Morgan, Morgan Stanley, BlackRock traders buying everything. And when bullish rally taking a pause, when it reaches Alpha Fibonacci reversal zone, this is very different sell-off because price respects critical institutional support. Market not crashing, market keeps rallying with vengeance because institutional support levels remain respected. There is no sell-off now, is there? Institutions keep adding to their longs. This is the power of the system. Institutions holding positions for weeks, months, and years when billions of dollars are moved. So when you're trading your little account, your micro, your macro account, and you're trading with them, you are always on the right side of the market. Since March 23rd, our bias had been firmly bullish. We remained unwavered. With the system, you understand very, very clearly where to buy, where to sell. with Goldman and JP Morgan institutional traders. This is the system right now. Institutions holding their longs, institutions not closing positions. Markets are extremely challenging. Very few gems are present. With a system, you're extremely well prepared in advance. Very few gems are present. Here, hundreds of trades every single day. Last week in March, first week in April, mid-May, June, July. Endless buys, endless longs. Now, top 1%, 40% richer. This is a stunning reminder. Spend your time wisely. Do not chase cheap indicators. Instead, trade pure price, and you will know many, many months ahead where to buy, where to sell as a hedge fund trader. So here's the system on 1 minute chart this morning. This is what I was just teaching in the class. This is institutional buy point. It's right here. The rest of the market is junk. This was stunning, spectacular open. But we knew this days ahead. We knew this since November 2nd. And as we discussed in class, nothing here to do for hours. Walk away from the screen. Come back again here. That's the power of the system. You trading your little account, riding Goldman train. And that's no matter what you trade. So when student this morning sharing that this is what they've done in the worst market conditions, you should not be surprised. All precise. Can share this morning this 150 out of 150 trade on Bitcoin and options. Ken chooses trading different instrument, of course, and all of this during the worst crisis. Jason reporting 92% success rate. Trading metals. All of these traders trading as hedge fund traders. Every trader different experience. Every trader different account, but every single one of these traders trading as top 1%, obeying alpha Fibonacci rules. It never gets sold, I promise. So when Ken says, still amazed how you developed this genius strategy 30 minutes ago, and he says bread is inspiration, because when during the worst market conditions, student performance is this is what top 1% does. Every single trade remains long because bullish institutional trade is unstoppable. And these are the worst market conditions. Institutions holding their longs. Imagine what's possible during the best market conditions. My incredible traders, from hedge fund to beginner trader, this morning and every day prove if you obey the rules with Alpha Fibonacci system, you can trade anything you choose with ultimate precision. So please turn off the noise and recognize the biggest rally during the worst market conditions is a stunning reminder. Pure price is everything. News are noise, designed to create panic. Crisis is always opportunity for top 1% to buy the bottom. And if you trade indicator-free system, complete semi-automated system with multi-market scanner and proprietary alpha Fibonacci software, or NinjaTrader 8 or lifetime system for anything, you're looking at institutional chart and you obey the rules and place the best trade for you. But if you would like to add hundreds of stocks or anything you choose to trade, traders do this all over the world. You can do this with a single click. And that's the power of the system. A strategic, precise, institutional trend system that removes speculation and allows trader to trade markets as strategic alpha Fibonacci chess across all instruments. System indicator free for entry and proprietary alpha Fibonacci retracement. You will never ever need anything else, no matter what you trade. Sorry guys, I've been teaching the whole morning. Let me take a sip of tea. So here's Carlton. Carlton tried for 15 years before. Carlton killing it in the market and trading for a hedge fund, obeying the rules. As you can see, in the month of September, he accomplished 7% in another account which he's trading for fun. So when you come to the website, you can listen to students' podcasts. You can see their journeys. Because this is what your journey starts with this. No indicators here. None are ever needed. Because if I click on this chart, and you don't look at the name, and I type in Apple, it looks exactly the same. This is what system all about. It's pure and simple. You don't need to use indicators. You don't need to block your vision. You need to pay attention to price. And when you do, you can trade any instrument you choose from 1, 5, 15 minute to monthly, daily, weekly. On Apple, on Amazon, on any instrument. So here's Apple in 2016. Apple comes out with the worst earnings in 13 years. I presented hedge fund convention and I say, if Apple will continue respecting this support, Apple will double and triple and quadruple in value. Despite worst earnings in 13 years, 2 years later, Apple doubles in value. 2 years later, Apple reaches alpha Fibonacci resistance. What do you know in advance? The following target. After the following earnings, Apple reaches decision point 2. Months ahead, you know where Apple will sell off from. So when Apple reaches 216 level and continue respecting support, this is exact same thing S&P doing right now. 3,500 traders, lifeline on S&P weekly. Apple respected 216 for weeks. What do you see at the bottom, 140? When Apple in free fall, it's because support is out. And when Apple reversing from 140 and reaching reversal zone again, no one should be surprised. All precise, all in advance. But this is S&P mini traders. Identical chart, identical rules. Identical bottom this morning. Identical buy point. So if you trade 1 minute chart, that's what played out. You knew this buy point days in advance. And if you saw this identical level on Apple, this is where S&P is struggling right now. This is day trading chart. It's identical accuracy. This was Apple 2018. If you can trade one instrument with Alpha Fibonacci system, you can trade it all. You decide what you want to trade. This is a system hedge fund managers trade. From multi-million to multi-billion-dollar account. If you trade with them, if you're riding JP Morgan train with multi-million-dollar power, with your micro account, with your any account, you're always on the right side of the market. First key step, scratch the indicator, scratch the junk. Goldman traders don't chase cheap indicators, so why would you? There is no stress and no speculation if you understand the price. Simply obey Alpha Fibonacci rules. Pure price for entry is precise, top precise, targets precise. This is a system on S&P. And that's identical rule as on Apple, as on Bitcoin, as on options, as on stocks. As students share, when Andy brings his 14-year-old son to the course, Andy's hedge fund manager in London, no one is surprised. This is Andy's email. Hedge fund manager in London tripled his account since July. Andy bringing his son Dominic to the course, 14-year-old. Dominic knows what he will do as career in his life. That's it. Listen to the podcast and see what's possible. When you trade the market with 14-year-old son. This is 3 weeks in the course. This is how pure system is. Ultimate simplicity only. Every trader, different background, different instrument, different account. All I'm asking you, make an effort. All I'm asking you, obey the rules. So when you come to the website, you will see and hear, as you can see, podcast channel. All of these traders under students podcast. And that remains critical that you listen, because if you do, the sky's the limit. You will find someone just like you who struggled for many, many years, but now obeys the rules with Alpha Fibonacci system. That's it. This is how simple this is. If these traders can do it, so can you. Working maximum 8 hours per week, 2 hours in the morning, 10 as cut shares, all depends what you trading. That's the power of community of traders who are trading as hedge fund traders. It never gets sold. Listen to Dominic and Andy and Carlton, please. So if you decide to trade Amazon with Alpha Fibonacci system, of course, traders do this, obeying Alpha Fibonacci rules. 2018 Amazon mid-trend stuck between critical support and critical resistance. Many, many months ahead, you know where reversal zone will be. So when Amazon reaches reversal zone and comes out with excellent earnings, it is shock for everyone when Amazon selling off $700 per share 2018. And when Amazon does identical thing in 2019 and 2020. 2019 $400 sell-off and reverses from ultimate bottom. 2019 the start and key support. No one should be surprised. All precise, all in advance. That's the power of the system. So if you're wondering why Amazon is in so much pain right now, it's because Amazon is stuck. Let me show you Amazon right now. Frozen and stuck at reversal zone for the last 5 months. 2930 is critical support on Amazon, but ultimate bottom with Alpha Fibonacci system was 1300. That's the power of the system that let you buy ultimate bottom. But identical thing played out on S&P this morning. You don't have to wait for months to see the power of the system. It is all the same. It plays out in the trading room every single day. So, traders keep sharing what they trade. Different stocks, different options, different Forex, different Bitcoin, different everything. And that remains. So when Emmanuel bringing his wife Jennifer to the course, and with little 2 babies, Jennifer does this. This means the world. It never gets old. This is a power as she is sharing how they trade. Husband and wife team during crisis traders. So imagine what you can do if you focus and you don't have little babies at home. 14-year-old and mom with little babies during a crisis can do it all. This is Scott's performance. Scott is hedge fund trader. Started the course in May from 4 million to 6.5. Scott chooses to trade stocks, Bitcoin, and options, obeying the rules. With this critical second step, turn off the panic, turn off the noise, trade the price with institutions only. And if you do, the skies are the limit. As again, traders prove every day in US and 57 countries, trading it all. Here's a system on Dow futures, pure price for entry and alpha Fibonacci proprietary strategies for exit. You don't need indicators, you only need this. Gerald, 35-year-old CME trader. Stop by in the trading room. Gerald is a current student. Gerald killing it in the markets. Gerald brought his brother, Derek, to the course, another hedge fund trader. That's what's possible when you obey the rules. Here's a system on oil. Oil at the bottom in 2016. So if you understand this system, you understand ultimate power to buy the bottom, correct? Oil starts bullish rally. Bullish rally goes on. 2018, oil overextended. Many months ahead, you know where reversal zone will be. So when oil is selling off 2018, no one should be surprised, correct? It's a reversal zone. Oil in free fall. 55 is critical. When 55 is broken, oil selling off. Let's scroll forward to 2020 when I worked with Saudi hedge fund manager. What did he do? Buying oil at the bottom, but how did you know? You knew this was Alpha Fibonacci system months and years ahead. Sell-off continues on oil. 2020, correct? Look at the numbers. 15 is next. When 15 is out, what is next? Shocking! Zero, a negative number. We've never seen it on any instruments. It's a historical event. So when oil skyrockets from ultimate bottom, no one should be surprised. This is where billions and billions of dollars taking position. So when bullish rally reaches the end of the minor trend, you know this many, many months ahead. Price been stuck here for the last 6 months. There is no surprise, all precise. And that's Alpha Fibonacci system on oil since 2016 to now. Let me find oil chart now. Can you hear me, traders? Please confirm. If something is not matching, it means your internet is not picking up. Hold on, I'm trying to see where I can post. One moment. So let me find oil now. 1 second, traders. Too many charts. So here's the third critical step to trade like a hedge fund trader. Every single day, trading range changes. Every single day, you must identify trading range. So this morning on S&P, trading range was spectacular. This was the best trade since November 2nd. Nothing comes close to what played out today and November 2nd. This opportunity may not play out for days. Why? Because institutional rally overextended. Right now S&P is asleep. Right now it's a very different trading range. This is your trading range right now. You are never shorting near this support. But if I convert this chart right now to 15-minute chart, as you saw, also on Apple, on S&P, on any instrument, this was so much better. This was stunning. This is chop. And you know this hours and days in advance. So if you identify trading range and it's spectacular, you do not leave the screen. You trading with power. Students, love, love, love gold. This is straight on gold with precise entry and precise stops. Pure price for entry and Fibonacci for exits. You will never, ever, ever need anything else. This is how system looks on your chart with Ninja Trader. So when students trading at a difficult trading range, which plays out in current markets 90+% of the time, no one should be surprised. No matter what you trade, if it's cryptocurrency, if it's stocks, if it's options, if it's anything. This is community of incredible traders. But if you decide to trade pound, of course you can. This is pound for the last 10 years with alpha Fibonacci system. Years in advance system identified. 3600 is critical support. What do you see at the bottom? 1100, correct? At the bottom, ultimate bullish trend inception. Has anyone seen good news in Britain? Tell me. Has anyone seen what's happening with COVID? So how is it possible that the biggest rally playing out on pound 2020? Bullish rally continues with vengeance on pound. With Alpha Fibonacci system, you knew this years in advance. That's the power of pure price for entry and Alpha Fibonacci for exits. If day trading not your cup of tea, use everything long term, as hedge funds do all over the world with Alpha Fibonacci system. Fourth key step, utilize synchronicity with scanners. Wait for your trade, scan hundreds of markets in seconds. Trade stress-free without need to stare at the chart. You're trading with institutions, with the scanner. You never have to flip the charts. You never have to chase the markets. You never have to place trades after the fact. This is the power of strategic, intelligent system. This is what scanner looks like. Now markets are quiet, but this is a scanner on S&P in front of you now. And with a single click, I can add any instrument I choose. Choice is yours. Do you want to trade Dow? Do you want to trade Bitcoin? Add and click. Done. Single click. Second instrument. You look at the scanner, you look at your chart, you trade with institutional volume and institutional trend. That's all. You will never, ever need anything else. Critical fifth step. You become who you're surrounded by. We have incredibly powerful, positive community of traders. Every single day, traders share their results. Every single day, traders inspiring each other. This never gets old, I promise. This is what played out this morning. This is what plays out every single day. So if you're joining us, it's one of the smartest things you have ever done. Because if traders do this, so can you. This is hedge fund account. This is what Ken reported before in May. In May, Ken was 40.40 for Bitcoin, correct? Ken posted movie on the website about his life. This morning, Kevin, 150 at 150. You decide what you want to trade. This never gets old. Choice is yours. It is that simple. What I teach to hedge fund traders, what I teach to JP Morgan trader is what I teach to trader who has micro or mini or macro account. In the room every single day, mix of traders from beginner to hedge fund manager. That's it. So when students send me the email, attorney in Florida, and says, this is the best investment I have ever made, it never gets old. And when students try for 20 years and accomplishes this, it never gets old. And when student invite me to his wedding, and when student reports this, it never ends, I promise. You absolutely choose what instrument, what account, when and how and what you want to trade. Absolutely, 100,000% your choice. All you have to do is obey the rules. This month is a final offer. January 1st, 2021, everything changes. So when you come to the website and you read students' emails and you view students' performance and you listen to students' podcasts, please review everything below. This is lifetime system for day and position trading on any instrument you choose, with 3 months course, with live classes, with video library, with modules. And if you're trading with software for Ninja 8, you're receiving multi-market scanner. Scanner right now actually giving the alert. This is what scanner looks like. Everyone sees this. Is anyone surprised? Should not be. S&P at critical resistance. Not the place to buy, is it? But in order to trade, you must obey alpha Fibonacci rules. And when I work with you in private mentoring, which is absolute maximum 4 months, students finish private mentoring after a couple of classes. Student I worked with last week for the first class already trading. I teach you identical trade. I teach to JP Morgan trader. Any questions? Listen to podcasts, view performance, read reviews. If I can put tens of thousands of emails I receive, it will be hundreds and hundreds of pages on the website. Simply click and read. Because if these traders can do it, so can you. You decide what instrument, what time frame you want to trade. And when you trade with institutions and you trade as hedge fund trader, the skies are the limit, as proven by traders all over the world, on futures, on stocks, on forex, on option, on Bitcoin for the last 10 years. Choice is yours, what you want to trade. So 20 days left at the current pricing. Because when my students come to me and say, you sell multi-million-dollar system for a few $1,000s, you need to ask for much, much more because system is priceless. I listen to my students because I love what I do. That's it. You decide what you want to trade. System is extremely powerful. All you have to do, make an effort. And if you do, and you win Forex competition after a few classes, no one is surprised. And that's community of traders all over the world. They trade and think as hedge fund traders. I love what I do. Any questions for me? Simply pick up the phone and call 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. I wish you very happy Hanukkah, very happy Christmas, very happy holidays. I look forward to working with you. If you are serious about being hedge fund trader, that's all I do. I mentor you how to trade, how to think, how to live as top 1% does. And you can trade the instrument on any platform, any instrument you will choose. Thank you, traders, so much.